Good morning, everybody. Welcome back to another episode of the Market Open. We are starting early today because I just remembered like 10 minutes ago that we have non-farm payrolls. So I thought, you know what? It's Friday. We'll go live early at 8:25. We got 5 minutes until we get those non-farm payroll numbers. And we're going to see how badly the market reacts to it, how much the market doesn't care. The market wants 130,000 jobs. Sorry, 140,000. Unemployment rate, the market's expecting to be at 4.2%. So those numbers are going to be pretty relevant as we get into the show today. And we're going to see how the market reacts as well. Good morning. Good morning. Good morning. Good morning, everybody. My voice is still gone, so I'm going to try not to yell today, hopefully, and try to just keep it a little bit more chill. I am feeling okay. I'm not sick, but it's obviously, you can tell it's still bad. It's still bad. So I think it needs like a weekend of just no talking. But yeah, during the week, this is what I do. So I'm gonna need to chill for Saturday. But we're gonna try to take it easy today and just not like overly get expressive, which is gonna be hard to do if this non-farm payroll number is not good. So we're gonna keep trying to figure it out. GTA 6. So I put that in the title because that was one of the biggest headlines this morning. Yeah, that one got delayed till 2026. So for all of the people that are big Grand Theft Auto fans, I'm not even a fan of I played it when I was younger. I don't really like care that much about it. But yeah, that one is now delayed. Take-Two Interactive, which is the company that builds the software for Grand Theft Auto, the gaming, is down 10%. in the pre-markets. So yeah, that's going to be interesting to see how that plays out today. But look, sometimes you can't rush greatness, and Grand Theft Auto, it's been more than a decade since the game came out. People are getting excited for when it comes through, but it's going to take even longer now, which just means it should be even better, when it comes out in 2026. Japan, USA stuff. So after non-farm payrolls, we'll talk about that. We have updates on China last night. We have updates on Japan, USA this morning, which Japan kind of flexing their muscles when it comes to negotiations. So we'll talk about the implications of that. China actually gave us some concessions. This news went under the radar, but China quietly got rid of tariffs on a bunch of different imports. So we'll talk about all of that after we get non-farm payrolls. But yeah, Japan and China, both of those headlines, very important today for the markets. This jobs number is just going to be the most important one. It was supposed to come out in 2025. I believe the end of 2025 or like around that Christmas time. Or actually, no, I think it was supposed to be summer. Yeah, that's why people are really upset, because now it got delayed. Good morning, everybody. Peter, what's up? He-Man, what's up? The good fella, what's up? Good morning. Wong says the stream keeps pausing on my end. Just refresh it. I think that's YouTube having a bug. Seems to be good for everyone else. Should be good with the connection today. Audio today, hopefully should be all right. XYZ, this one. So I talked to Steve last night. Everyone wants to know what Steve thinks. Yeah, he's getting out of this thing. It was so funny because a month ago he was so excited for it. This thing's down 22%. My thesis to him was just like, dude, do you really trust Dorsey? And he thought the numbers, mattered more than Dorsey. But, I actually got a message last night by someone who used to work at the company. And basically they said Dorsey doesn't give a shit, which kind of affirmed my thesis. They don't work at the company anymore. They left. But yeah, I don't think Dorsey cares that much about it. So I think Steve's going to DCA and then sell aggressive covered calls against it to get out of it. But it's not a massive position. It was just one of those positions where he thought the numbers made sense and didn't end up turning out that way. All right, here we go. Non-farm payrolls. Let's get into it. Wow, 177. 177 versus 130. That's actually a good number. That's a good number. Market thought 140. We come in at 177. That's a lot more jobs than expected. Unemployment rate still at 4.2%. And government payrolls, we thought we would lose 3,000. It ended up coming in at positive 10,000. Wow. That's actually not bad. All right, let's get some more on that. Here we go.
In Chicago, you got the under or the over, Rick, on the 133.
You know what? I'm going to go just slightly over. I feel like I'm in a big Fibonacci mood today. I'm going 144,000. I think it's going to be basically close to expectations. maybe a little higher. Everybody, of course, making a big deal. And 77,000. We're expecting, as Joe pointed out, 133,000. 177,000 would be the second best of the year outside of what's in the rearview mirror, which was 228,000. That becomes 185,000 because the 2-month adjustment is minus 58,000. Now let's go to U3. The unemployment rate remains at 4.2%. Let's look at the average hourly earnings on a month-over-month basis. Expected up 0.3 comes in light, up 0.2%, equaling February. To find a smaller number, you have to go all the way back to August of 23. Now let's look at earnings on a year-over-year basis. Also 0.1 light, 3.8. We're looking for 3.9. 3.8 equals the rear view mirror. And if we look at the work week, the hours worked, all employees, 34.3. That's good news. We upticked it 1 tick based on what we were expecting, which was 34.2. But the revision, I was looking at the rearview mirror, 34.2, where we gained a tenth on this reading, but last month it was revised to 34.3. And, you know, we've had a lot of 34.3s in 24. To find a higher work week, you're going back to January of 23 when it jumped up to 34.6. Now, let's look at the U6, labor force participation rate. This is very key, and it kicked up again. This is really good news. 62.6, a tenth better than both windshield and rear view mirror. 62.6 would equal the best read of the year. To find a higher read, you're in November of last year. And I'm sorry, September. Let's make that SEPA last year. Finally, drum roll, please, Joe and the gang. U6, or the underemployment rate, comes in at 7.8. That is 1/10 lighter than 7.9 in the rearview mirror. So that also is indeed good news. You can see the market's yields are going up, Joe. Selling treasuries, that is basically a verification that the report's a little stronger than expected.
Wow, dude. What a report. What a freaking report, dude. My goodness. Market should be loving this. Amazon back to 190. Amazon was at 180 yesterday. Let's look at some of the other big names that we have right here. Robinhood up about 1.3%. Tesla up 1%. SoFi up 1.2%. Amazon, again, basically flat, but green from yesterday. Meta up 2%. Where's the S&P? I think the S&P should be up at least 0.5%. S&P up more. Yeah, look, 562. Bro, 570 was a 200-day. So, I mean, we're not that far away. Palantir up 1.5, NVIDIA up 1.5, Grab up 1%. Market likes it, guys. Microsoft up 1% after going up 8% yesterday. Market's not hating it. Googs at 164. I mean, it's not horrible. Unemployment is 4.2% for those that are just joining. We came in at 177. Let me pin that right here. 177 non-farm payrolls versus 130 expected. Now rate cut probabilities are going to come down because of that. In March, yeah, it's gone down to 4.7%. June, I mean, look, I still think we get a cut, but the whole argument that the labor market's tanking, unless you think the data is fake, I don't know, man. Like, labor market's definitely not like getting 400,000 or 500,000 jobs a month, but it's not going negative, anywhere close to negative at 177,000. So that is not too bad. For those that are saying the stream is lagging, that seems to be a YouTube thing. It's for a couple of you guys in the chat. Just refresh. I think I should fix it. It's not on my end, but yeah, a couple of you guys said that just refresh the YouTube app. That should hopefully fix it and make it better. Meta right here up 1.19%, and then Robinhood right here up 1.24. All right, so non-farm payrolls, again, 177, unemployment rate 4.2%. Average hourly earnings month over month is up 0.2%. Average hourly earnings year over year is up 3.8%. Again, those are a little bit lower than expected, but that's good because that means inflation is not that aggressive. Participation rate is 62.6%. So this number, if you take a look at this, if we go back to 5 years ago, this is basically where it was at during COVID. Look at that. During COVID, it was 63.3. Then it dropped all the way to 60 with the pandemic. It's pretty much right back there where it was 5 years ago. I mean, that's just not bad. That's not horrible. So you've got a jobs report that I would expect a Trump tweet probably soon. to see him take credit for this. TJ, what's up? How you doing? Is the sky falling or are we getting? No, the sky's not falling on this one. This is a great report. This is a great freaking report. Markets are loving it right here. It is a Saturday, or not a Saturday. It's a Friday. So we're going to see if markets want to hold on for the weekend based on what we've got going on. NVIDIA right here up about 1.62%. Robinhood 47.17. SoFi up 1.04. Microsoft at 428. And then you got the Qs. How are the Qs doing? Qs are, look at that, up 0.65. Any piece of good news today, we're going to get some more momentum. It's Trump's jobs report. Correct. This one Trump gets to take credit for. Dude, this is good. This is good. This is not a bad report. I was expecting something way worse, just given how much people have been feeling scared about the labor market. And to be fair, we got horrible initial jobs claims and private ADP roll data on Wednesday. So this data goes against that.
This number to be negative, but
Okay, so now we got to wait. We're going to write this.
we're
number
going to
off.
have to wait. There are
We're going to write
scant-
this number off, even though it's great.
there are some signs of what we've been talking about in this
Tell me
number.
what they are.
So federal workers down by 9,000. That's something that's an
Well,
interesting question.
That would be the market going up definitely on that.
Well, some people in the market might like that. If you're waiting for your Social Security check, maybe not. However, that's something that we think is going to come down the road. A lot of these folks were put on temporary, or they were given severance pay, so they don't qualify. Plus, some of the courts put the jobs back. Manufacturing was down 1,000. I'm interested in that number because I want to know how much manufacturing is affected by the disruption of the supply chain from China. Now, here's the thing that you have to ask yourself. Private education and health services up by 70,000, with healthcare and social assistance up by 58,000. This has been a perennial source of job growth before. And the question is whether or not it's anything the federal government is doing right now is going to change that. I think it might. The other thing that's out there is travel and leisure up by 24,000. That could also be affected. We've had negative reports there. Finally, one other area before we get to our esteemed panel here, which is the issue of retail was down as well, but warehousing and transportation up by 29,000. It could have been they were hiring lots of folks in order to handle all the stuff that was coming in ahead of time. So there are these questions that we have.
Well, it sucks for my TLT. It sucks for my TLT. Take a look at yields right here, 4.26. They should be going up, right? The market should be selling bonds to buy stocks if you get a report like this. So TLT is screwed today. We're going to need rate cuts to get TLT to get some momentum, but I'd rather have stocks go up. And as long as stocks are going up in consistency with yields, that's what gives it some momentum right here.
Going to raise prices is going to lower demand. And what this report is telling you is that it doesn't have to be that way.
Right.
It really doesn't, because the country is strong. Jobs look great.
Okay.
GDP looked great this week. And so we're in a situation where fundamentally
But I mean, if you the GDP, even though it was negative, there were reasons for it.
there were reasons
Well,
for it.
let me just ask. I want to get Allison in on this. So, President Trump said this is Joe Biden's economy until this number probably. Now it's going to be his job gains, is it not?
Well, yeah, maybe he's going to say that employment's forward-looking and GDP is backward-looking. that might be it.
Who's this? Who's 177? The American economy is bigger than Joe Biden or Donald Trump, I think.
It is. Like, normally, I don't like to give presidents credit for the economy, good or bad. I mean,
Yeah.
I think the tariffs is sort of an exception because that sort of injected a lot of uncertainty and actual trade flows in a way that presidents usually don't get credit for. But I said there's no doubt this is a good number, and whatever lies ahead, I don't think people can deny we're going in at least fairly resilient.
I mean, Natasha, do you think that by next month the tariffs will start taking hold and we won't have a strong number?
I think in the months ahead, what you're going to see, and the work that me and my colleagues have done at the Yale Budget Lab, is try to scope out the impact of tariff rates that are at levels that we haven't seen in the last century. And what that impact is going to be is it's going to be a decrease in GDP by around 0.6 percentage points. It's going to be a decrease in employment, and it's going to be an increase in household prices.
Yeah.
I do think you're going to start to see all of that show up, but I want to be specific here. This is, and as Allison is saying, this is all sort of man-made policy mistakes that we're in the context of trying to navigate, and businesses aren't really sure where the world is going to go. There's a ton of uncertainty. You're hearing this morning, Becky was talking to the folks at Berkshire, there's a ton of uncertainty about the direction that the world.
By the way, Buffett is speaking on Saturday for like 5 hours at the annual meeting. We're going to find out if he sells Apple. We're going to find out all the moves he makes on Saturday. So Saturday morning, that's an important one. And we'll get an understanding of where he thinks the state of the economy is right now. After this, we'll talk about Amazon, Apple earnings from last night, and then we'll keep getting into the show.
Is going to take. And I think that uncertainty makes it really hard to plan because you both don't know what interest rates are going to look like and you don't know what demand is going to look like. So how do you invest in this country?
So the Manhattan Institute liked everything that Trump did except for the tariffs.
They all knew where they were.
Yeah, I mean, I think we're still keeping our fingers crossed for deregulation and tax reform. But I mean, I've been following your estimates, and I think it's important to look at them carefully because I think we're starting to sort of get a little hyperbolic saying we're going to have a depression. As you guys point out, we're going to end up probably with maybe not a recession, but certainly slower growth than we could otherwise have, in part because the economy is so strong going in. So while it isn't good, I think we're starting to see that this might not be, horrible, but just not all it could be.
Rick, I heard you talking about something. I'm sure you got things on your mind.
You know what? I missed something, Joe. I missed when there was certainty and everybody knew where interest rates were going. How did I miss that chapter, actually? I find this hysterical. I just did a big Wells Fargo event, and all these big institutions were, of course, talking about, interest rates are different than equities. We're always a little nervous to, put our face on where interest rates are going to be. And now all of a sudden, we inject this tariff uncertainty, and pre-tariff uncertainty, everybody knew everything about markets. Listen, there's risks in markets. I find it so fascinating. The UK market's been up, 14 days in a row. Our stock markets have been green a lot lately. And yet, that's all we do is continue to talk about how everything green is turning brown, how we've gone from spring to fall. The key in the conversation so far is man-made, man-made. This is not an exogenous shock. Can't treat it that way. And how it all turns out, no matter if it was a good thing, a bad thing, a mistake, I don't care about that. I'm a market guy, and the markets are looking past the rhetoric, and the fact that it's man-made means it's going to end differently, and it's very difficult to model.
Come on.
I don't know what to do with that because the issue, Rick, is that
it could be a starter.
There's underlying uncertainty all of the time. You're correct.
That's true.
And the issue for me personally, as reporting this, is that it's okay to have a man-made policy injection or change. The issue has been it did not necessarily have to been injected in the way that maximizes uncertainty and maximizes the negative potential reaction of employers who say, look, we're holding back here. And look, there's an idea here, which I think was interestingly, or maybe ironically, suggested by Natasha, which is that it could be much better. Right? You have, and by the way, we're coming into the graduating season here. We're going to have an injection of workers into the workforce. What's going to happen to those new grads? Will they have jobs? Will the idea, look, it may be, and I think Allison was suggesting this, I'll go back to you on it. It's a very dynamic economy. That is the hallmark of the American economy. We adjust to stuff, and this is sort of picking up on what Rick was saying, and we're able to take blows here and there. So maybe this thing is a terrible thing, these tariffs, but maybe businesses are finding a way to adapt.
Yeah, because I hate tariffs more than anyone, but trade isn't really that big a part of our economy.
Right.
So if we do end up settling at 10% tariffs, I hate that, and that's higher than almost every other country, and it will be the economy's less dynamic and growing less than it should, but it probably also won't be, it might not even cause a recession. It will just mean the economy's less good than it could be.
Dude, here's the thing. All right, first of all, good morning. Thank you, everybody, for joining. Non-farm payrolls, 177 versus 133 expected. Here's the thing. I've had this theory for the past month now that Trump does not want to be responsible for a recession. I don't think it's that original of a theory. I don't think he wants to be the guy that people associate with a recession. So there's two possibilities. Either we have a recession and he blames it on someone else, like Biden or Powell, or he just stops us from having a recession. And I would hope that it's the latter. So when we think about non-farm payrolls being better than expected, this number will get significantly worse than expected if the trade war continues. unless the actual Trump thesis plays out and we get so many hundreds of thousands of manufacturing jobs that it overcompensates. But, you know, you're going to have an offset of a lot of people losing their jobs. So the net is not going to be that strong. And we're already seeing this in other types of data, even if it's not non-farm payroll, in terms of initial jobless claims being way higher than expected, the most since April 2020, yada, yada. So the best solution to all of this for him to keep the momentum of non-farm payrolls being the way they are, or just the broader economy not being in a recession yet, is to get rid of the trade war. The only way to do that is we got to get deals. The Q's right here up about 1%. And so I think Trump has a grace period of about, let's call it a month and a half, to be able to get some significant deals done, which I think China's getting to their breaking point soon, and we're going to talk about them today. And then he'll get to avoid, hopefully, a recession. That's also up to Powell to cut rates. And if Powell doesn't cut in June, it will be a Powell recession. It will not be a Trump recession, because everyone's going to be thinking that it's officially time. And, you know, if Powell doesn't cut when it's time to cut, then, you know, the blame is going to shift. But as of now, people are thinking this is a tariff-driven recession. And if that tariff-driven recession can turn into a negotiated trade war that dials down in terms of the acceleration of the adverse nature of it, then I think we can get back to having good earnings, decent jobs, unemployment coming down. And I don't know what we're going to do about the deficit, but that part we got to figure out. Amazon right here, 192, up about 1% in the pre-markets as well. So, yeah, I mean, this is a good jobs report. Trump should take credit for it. It's just he's not going to get more of these over the coming months if we have a massive trade war. And I think he knows that as well. I think Bassett knows that as well. These guys are not stupid. It just comes down to a question of how do we navigate the current state of the landscape that's going on right now. So that's why when some of those analysts were saying, hey, this is good right now, but it can become a lot worse, I absolutely agree with that. We like all of this, by the way, is pre-tariffs. All of this. And, you know, not to be a Debbie Downer, but the same thing with earnings. Earnings were great on Amazon and Apple. The problem is it's all pre-tariffs. I mean, think about what we have to do in the context of Apple. Apple yesterday said, the one statement they said, and are they pumping a little bit right now? Because they were down 4% yesterday. Amazon's getting a little bit of a pump. No, see, dude, Apple's report was so bad, not the actual report, but one comment they said was so bad that even they can't get a pump right here. Still down 3% of the pre-markets. What did Apple say? Very simple. Apple said, and we'll go through their earnings more in depth in a second. They said we are expecting a $900 million hit to revenue, so a headwind of about $1 billion because of tariffs in Q2. Yesterday I said 900 billion on the show. I was like, okay, it's not 900 billion, but 900 million, right? So analysts now have to take off $1 billion off their estimates essentially because of these tariffs, and that's why Apple's down 2%. I think if the trade war starts to go away, then Apple doesn't have to deal with that, and you have some good earnings. But Q2 earnings are going to be really hard, and that's why I think Robinhood's not gapping up 20% after those earnings, because the market knows, hey, this was pre-tariffs. We're getting into a tariff volatile nature in which the market is not fully going to price in anything outside of it, and that's going to hurt. And so that's where I think you get a lot of volatile arguments around the broader market. All right, Trump tweet. Here we go. Gasoline just broke $1.98 a gallon, lowest in years. Groceries and eggs down, energy down, mortgage rates down, employment strong, and much more good news as billions of dollars pour in from tariffs. Just as I said, we're only in a transition stage. We're just getting started. Consumers have been waiting for years to see pricing come down. No inflation. The Fed should lower its rate. There you go from Trump. Now, this is confusing to me because, again, he can take credit for all these things, but then when he says the tariffs are going to be able to get all these billions of dollars, yada, yada, all of the data we've got in macro and earnings-wise, as good as some of it has been, it's all before the tariffs have been implemented. Q2 is going to be the real test of how bad are the impacts on tariffs. Now, to the credit of some companies, they said, hey, tariffs don't really affect us, which is great. To other companies, they do. In terms of layoffs, the recession, the macro, inflation, rate cuts, we're going to find out in real time over the next coming months how badly it is affected by tariffs. But as of now, Trump seems to still have this idea that this is the route he wants to go. And I just don't know if that's going to fully be what's in place over the coming years, or at least over the coming months when it comes to this data. So look, this was a good report. There's no way to hit against it. This was a great report on non-farm payrolls. This is what we needed. Trump should be taking credit for it. It's just to keep getting these types of reports, we got to get some progress on deals. And look, again, the S&P 500, bro. I mean, again, 50. I don't know what the exact level is. I believe it's around that 570 range or 575 now, but we are close to that 200-day moving average. 580, there's a lot of resistance. I know that, but at around that 575, if we get there and we reclaim it, I mean, it would, you know, we had a death cross a couple of weeks ago, but some death crosses end up being the bottom. Some death crosses end up being the top, and you have a really nasty spin downward. I think given we had 4,800 before the death cross, and we've got actual catalysts like China and India, South Korea, Japan trade deals in the works. They're not there yet, but we know as soon as they're announced, market's going to rip. Like we all know that's going to happen. I think that's what's allowing the market to stay elevated at these levels. I mean, we're trading at 22 times earnings. We're trading at 22 times earnings, which one could argue is aggressive given the earnings growth is good so far, but it's not amazing. It's just a question of can we sustain that? And the way to sustain it is to have good non-farm payroll data, good inflation data, but we need to get this trade war to calm down. So I guess we're going to see how it plays out. Good payroll means no pay cuts. No, I disagree. I think we'll get a rate cut in June. We're definitely not getting it in May. We need to get it in June. Like just because the payroll data today was good, but it was not, you know, phenomenal. Like, oh my God, the economy is overheating. It was like, okay, no, we added 170,000 jobs. Back in 2022, we were adding 550,000 jobs a month. Granted, we were recovering from COVID, but still, that was like an economy that was getting back on its feet. This is like stable. And if this thing starts going down, or if it starts stabilizing but doesn't accelerate, that means we're not going to really have growth. And so I think Jay Powell needs to give us a cut. It is absurd that the federal funds rate is double the 2-year Treasury. It just doesn't make any sense. It's overly restrictive at this point, and 25 bips would not hurt. S&P 500 right here up about 1%, but we've got to be able to get the market on our side by getting the trade deals that are necessary in order to keep it going. Amazon right here, 192. I did buy Amazon yesterday. I bought about 100 shares at 190, or I should say the chat bought 100 shares at 190. You guys told me to buy it. I bought it. Look, they had a good earnings, bro. We'll go deeper into Amazon's earnings in a second, but they crushed on pretty much every metric: operating margins, free cash flow, guidance in Q2. The one metric they missed on was AWS, but they missed by 0.6%, which I just don't think is enough for them to be tanking the way they were tanking yesterday. So let's see how Amazon does today. All right, real quick, let's do China and Japan, and then we'll get into Amazon and Apple. So here's a piece of news this morning on China, which I think is really important. China quietly exempts about a quarter of U.S. imports from tariffs. China has started exempting some of U.S. goods from tariffs, covering around $40 billion worth of imports in an effort to soften the blow of the trade war on its economy, aka China saying, hey, this stuff is starting to hurt us. The exempted products include 131 items like pharmaceuticals and industrial chemicals, and the move is seen as a strategic effort to match Washington's actions rather than an effort of goodwill. The exemptions highlight areas where Beijing still relies on American products, and the move is likely an attempt to mitigate damage to China's economy by avoiding a collapse in key imports, aka it's not them saying, hey, we will do something good for you guys to reciprocate. It's them saying, we kind of need to do this, because if we don't do this, we're going to have issues in our own economy. And then you have this update last night at 8 p.m. China says it's evaluating possible U.S. talks on trade. China's Ministry of Commerce says Beijing is assessing the possibility of trade talks with the U.S. According to a statement, China has noted that senior U.S. officials have repeatedly expressed their willingness to negotiate with China on tariffs. The statement released on Friday said. So you got two good updates on tariffs when it comes to China. Number one, China is saying they want to start talking in terms of the Ministry of Commerce. That's what Bloomberg reported last night. And if you believe them, then that means that we know the United States wants to talk. We know that Bessent has repeatedly said they're already talking. So we know the United States is game to talk. We know Trump wants to talk. Now it seems like China is ready to talk. And then, so that's good. And then number two, you've got China getting rid of some key imports or key tariffs on imports because they can't live without us. We can't live without them. We are joint twins. Like, we need each other. One of us doesn't have that much leverage over the other. We need their cost of labor. They need our consumer, and their economy already is being pumped up artificially with a ton of stimulus. So it's not like they can really, as a dictatorship, they can afford to not have their people revolt because Xi Jinping will just kill everybody. And so he'd rather have people go hungry than lose power. In the United States, like, we would, we have the Second Amendment, like we would really, things would get ugly. But in China, they can last longer. However, you got 1.4 billion people. At some point, if there is not products and money and an ecosystem and an economy that's thriving, you're going to have people start questioning what's going on. So we need each other. We need each other. And the good thing is that hopefully this deal meaningfully allows us to start working with each other. Now, the next update here is Japan. Okay, so this is what happened with Japan in the morning. that I thought was really interesting. The Japan prime minister said auto tariffs are absolutely unacceptable in an interview. And he also said the U.S. is reluctant to exempt Japan from a 10% reciprocal tariff. Now, this is kind of annoying to me because I think the way that Trump is going to negotiate with a lot of these countries is to get rid of that 10% tariff. In fact, and maybe I'm wrong on this, but I genuinely think that 10% reciprocal tariff is just like, it's just a negotiating tactic. I don't think Trump actually wants to collect 10% from every single country in the world. I think he wanted to impose it just to get them to the table and then bring it down to like 5%, 2%, or 0% to get a really good deal. But apparently the prime minister is saying, hey, we've talked to the US and they don't want to get rid of that 10% tariff, which actually makes sense because Trump just tweeted, hey, we are in the golden age of America in the context of tariffs. And so why would he want to get rid of that 10% tariffs? Because he's looking at all this money pouring in from the tariffs. But Japan's like, well, wait a second. Why would we negotiate aggressively with you if you're not going to get rid of the one thing that we can't stand, which is this massive 10% tariff? So I don't think we're that close to a Japan deal based on what the prime minister said this morning. I think we're much closer to an India deal. With India, it's a lot easier to negotiate because India's tariffs are already so absurdly high that they can start bringing them down, and that's already enough of a concession. But with Japan, it's a bit more of a deeper issue. So at least we're making progress for China, not necessarily with Japan yet. 10-year right here, 4.283%. That one's going up. And then you got the markets that are pumping based on non-farm payrolls being way better than expected. Look at SoFi up 1.84%. You got Robinhood up 1.57%. PayPal's up a little bit. Tessie 285. Palantir 119. Steve put out a tweet on Palantir last night that got a lot of people, got a lot of people thinking or talking at least. NVIDIA 114, baby. There you go. Up 2.29%. Grab 484. And then Amazon, great earnings, 192.67 right here on Amazon. All right. Not horrible. Not horrible today. And it's a Friday. So not too bad here today. Mitch says Xi will just kill everybody. Dude, I've seen enough China documentaries. There's one maybe we should all watch it together. We should do a watch party on it. But the amount of censorship they have created in China, like you guys already know the sort of like basic facts. Like Xi Jinping looks like Winnie the Pooh. So Winnie the Pooh is banned in China. You can't put out a picture. You can't tweet Winnie the Pooh in the Chinese social media. They'll kill you. Okay, they won't kill you, but they'll ban you and they might kill you eventually. So the amount of censorship they've created in their regime, especially using AI to accelerate that, is incredible, dude. Like they employ millions of people. The government employs them to literally look at hundreds of millions of posts every day and like auto get rid of certain words that they think could create a revolution of intellectual thought in the country. It's kind of insane, but yeah. So my point is China can keep allowing their citizens to go hungry if the economy is bad because no one's going to do anything about it. The US, we're in a democracy, we can. But even if China allows that to happen, I mean, you're going to get a lot of people that eventually get pissed off and they're going to take action, which, obviously is not going to be the best thing in the world. Let's get a little bit more of an update on the April unemployment data breakdown, and then we'll get into Apple and Amazon from last night, and we'll keep going from there.
The other country, like all these countries, like even within the Eurozone, all their non-tariff barriers, they suffer for that.
Unless you get both sides to change their ways.
Yeah, and I kind of think markets are still holding on for that hope that maybe we'll end up with lower tariffs.
Rick, I know you don't like tariffs, Rick, but I think you can find a way to justify Biden left a lot on, so that you can justify certain targeted or a narrow number of tariffs and certain bad actors.
I like the isolation perspective. We're isolating China, whether that was strategic or not, I can't tell you. Listen, Joe, if I had to kind of try to rationalize all the political decisions made over the last 4 or 5 administrations, it's a mug's game. I'm a market guy, as I said before. To answer your question directly, none of that matters to me, okay? Last administration made a lot of mistakes. The previous Trump administration, they all make mistakes. Politicians, mistakes are maybe what they do best. Hard tasks are what they don't do at all. Hard tasks like shrinking the federal workforce, like shrinking some of the spending we've added on since COVID. Those are bad things. Now, exactly how we fix this, I don't know. But what I can tell you is the U.S. economy is pretty darn healthy. The markets are forward looking. The data is going to be skewed for 2-3 quarters. So if uncertainty is going to keep you from investing, you might as well not read the Wall Street Journal for the next 2.5 months or 2.5 quarters. But if you wait till all the uncertainty is less, all the trades are over. I said 3 weeks ago to dip your toe in the equity water. You should have been buying if you were an investor,
Rick,
especially when everybody's hair is on fire.
You may or may not be right about the trade and whether people should have invested or not. I mean, by the way, right now, it looks like the markets are obviously up on a relative basis to where they were 3 weeks ago. So you're right in that regard. But in the grander scheme, but Rick, in the grander scheme of this uncertainty,
I don't care about the grander scheme. I care about the markets today and trying to make our viewers money for tomorrow.
I think this idea just a very short term. I mean, I thought that in some ways I would have thought you'd say that Trump is playing a long term game and claims he doesn't care about the short term. You're now saying you care about the short term, not the long term.
Do you know what kind of? Well, do you know what kind of game Biden was playing when he was awake? That is.
I'm not relitigating. I don't understand. Every time there's ever a comment that's even critical about what's going on today, it's somehow about 4 years ago. I just don't even understand it. But let me just ask this: don't you think that?
Whoa! You can't throw grenades and then walk away. Give me an example of what you're talking about.
I don't even know any grenade that was thrown. I mean, it's just anyway.
What did I say in the?
Yo, Rick. This is why Rick has been doing this for 20 years. This guy is entertainment. Like, this guy is entertainment. You can't lie, bro. This guy's entertainment.
The past that you had a problem with on short and long-term perspective, I'd like to address it.
No,
all I was the same. When presidents screw up mortgage markets, I talk about it. Okay, I talk about anything that affects the markets. And what isn't affecting the markets is this negative hair on fire that we talk about every day.
Well, a lot of small businesses are having their hair on fire. And my question to you is, don't you think from an uncertainty perspective, look, if the president said, I want to have 10% of tariffs across the board as some kind of tax, a new form, a VAT tax or something, and I'm going to implement it over the course of 2 years. I'm going to do 3% in 6 months from now. I'll do another 3% in 6 months after that, and another 3%. The world would know what's going on. Businesses could try to start to prepare. There could be some way to do that. I'm not suggesting I would necessarily be for that, but if that's the way, if that's the ultimate goal, there are ways to do this without creating the kind of uncertainty and hair on fire that real small businesses and large businesses are grappling with today.
You see what the hiring? Who does the most hiring in this country, Joe? Small businesses? Joe?
Yeah.
Small businesses, right? Okay, have we seen pretty good job reports? So what businesses exactly are we talking about? The ones using tariffs as an excuse because they can't make their bottom line?
To be fair, the tariffs haven't been in effect yet. So the small businesses that are giving you good jobs reports, we haven't had the tariffs fully have an impact yet. So I think until we get to like May data, June data, you can't really say small businesses are thriving because the tariffs haven't affected them yet to the point where they're unemploying people. And we're going to find out if they are in the next couple months.
I have a lot of things to say, but being a gentleman, I would like to give Natasha.
All right. So, I mean, look, it's a good intellectual activity to kind of look at that. But I think Rick is correct on some points. The broader argument here is that if you're a small business that just got hit with these 145% tariffs, and let's say by May it doesn't go away, that's when you have to think, hey, can I afford to keep these people on payroll for the next month, for the next 2 months? Can I wait till Trump gets a deal, or do I have to fire them in the meantime? I am quite optimistic that some of these businesses will be able to say, hey, I'm looking beyond the horizon. I think Trump's going to eventually get a deal and these 145% tariffs are going to go away. So maybe I can talk to my employees and say, hey guys, I got to pay you half your salary this month, but you still have your job. Just give it another month. Wait till Trump gets rid of these tariffs and then we'll get back to normal and then I'll fulfill your back pay, all that stuff. But if the trade war continues until like July, August, September, that's when I think it gets disgusting, which goes back to my first point of the show. These non-farm payrolls are good. They're more than good. They're way better than we expected, but there is a timeline on them being able to meaningfully sustain themselves if the trade war continues. And then I think that's kind of the core thing that everyone is worried about right now, which is why no one is right. Everyone who has a thesis on this right now is just the thesis. Until we get confirmation of the trade war continuing or ending, no one's going to really know how this ends up playing out. Okay, so Apple and Amazon. Apple, and Amazon. Let's talk about that. Can some of the small businesses collapse even before that? Yes, I think so. I mean, we've seen businesses go viral on TikTok talking about how they're shutting down, they can't pay the tariffs, yada, yada. I mean, so business is ruthless. I definitely think people can get shut down before that. So hopefully some of them can weather the storm. But the point is, like, we don't have any of that data yet. In May, June, we're going to get that data. But as of now, like, May's non-farm or June's non-farm payroll is going to look at what happened in May. That will be the actual impact of tariffs. It was April, it was getting instituted, right? We had Liberation Day and all that stuff in April. In May, you actually have the impacts of Liberation Day, reciprocal tariffs, and the 145% on China. And so it's going to take a little bit of time before we see how this plays out. Okay, so Apple, Amazon. First off, let's start with Apple. Apple revenue was up 5%. iPhone's up 1.9, Mac 6.7. You got all of these different metrics right here. China was down about 2.3%, which is what the street didn't like. I mean, look, Apple did not have a bad quarter. However, there's two things about Apple. Number one, Apple said that there is going to be a $900 million hit to their Q2 revenues in the top line going into Q2 if the tariff war continues. So across the world, they estimated about a $900 million impact, even though a lot of their products are excluded from tariffs based on the supply chains, the imports, demand destruction, yada, yada. They have clarified $900 million will be an issue. Okay, so that's one thing the street didn't like. That's why the stock is down 3%. It's one of the only red stocks in the market, even with this non-farm payroll report. NVIDIA right here, 114.39, because Apple warned that they're going to lose $1 billion in revenue. At least they said it now, so the analysts know they're not going to be surprised in a couple months, but that's not good. The other thing about Apple, and this stat I think is going to surprise a lot of people. I could not believe this stat. I called Steve last night and I asked him about this stat. Steve finally admitted to me that, hey, maybe they didn't do the right thing on this, even though he's been defending this thesis for a long time. Hopefully we'll get him on the market close today. He's not going to make the market open, but on the close on Fridays, he tends to join, and I'll get to personally grill him on this, and it'll be a fun conversation. Apple has bought back $716 billion worth of its own stock over the past decade. They initiated a new $100 billion buyback plan. That number will be $816 billion over the coming years. Let me say that again. Apple has spent almost $1 trillion buying back their stock. I don't know about you, but I feel like $1 trillion could have created the next biggest LLM, could have created electric cars, could have created robots, could have created a new product or device that all of us use. Like, the fact that they spent almost $1 trillion growing EPS by just getting some of their shares off the market, and that is what has led to them being the, at this point, second most valuable company in the world now under Microsoft. I wonder what Steve Jobs would say about that. I really do. And I'm not saying buybacks are horrible, but I wonder what Steve Jobs would say about that. By the way, I don't think people know the story on how Apple started doing buybacks. Apple started doing buybacks in 2013. The story on how they started doing buybacks is the stock was in the gutter. It was 2 years post Steve Jobs passing away. Tim Cook goes to a dinner. He goes to a dinner. And who's at that dinner that gives him the advice about starting to buy back their stock? Who's at that dinner? Well, it's one of the most ruthless people on Wall Street that obviously only cares about shareholder returns, not necessarily the sort of innovation of a technology company to last for many decades. Carl Icahn. Carl Icahn's at that dinner. And Carl Icahn says, Timmy, buddy, we'll buy your stock if you buy your stock. You buy your stock, we'll buy your stock. And Tim Cook gets the genius idea. It wasn't Buffett. Buffett bought it in 2016. Buffett wasn't looking at Apple in 2013. It was Carl Icahn that told him, it's time to buy back your stock. And Tim Cook, because, look, he's an amazing executive CEO, but I think if that was Steve Jobs in that dinner, Steve Jobs would say, screw you, I'm going to go build the next biggest thing. I'm not going to be worried about buying. That's what Elon's doing. Elon's not buying back his stock. Elon's thinking about how do we build robots. Tim Cook said, okay, makes sense. You buy my stock. If I buy my stock, I'll buy my stock. You buy my stock. And then Apple goes on this massive run. But it has been largely driven, yes, by a lot of good products, Apple Watch, AirPods, all that stuff. That was great. But realistically by buybacks. And so now you can't keep doing buybacks because now the market has a lot of other opportunities, AKA the AI revolution that is manifesting itself in a variety of different companies, Tesla being one of them. And the market's looking at, like, why does Tesla get this multiple even though their earnings aren't as good as Apple? Because there's potential, there's hope, there's belief that Tesla's going to just become a massive company. With Apple, that hope is not there. And Apple already trades at 35 times earnings. You know, you're trading at 35 times, growing the way it's growing. It's unfathomable that buybacks are their way to keep this whole charades going versus investing in the future. Now, Apple might be investing in stuff that we just don't know about, but unfortunately, we haven't seen the fruits of that labor yet. So from that perspective, I think that's an issue for Apple, and that's why it's down 3%. All right, we have an NVIDIA headline right here from The Information. Let me pull this up right now. That might be why NVIDIA is getting to this 114 level. Then we'll talk more about Amazon. NVIDIA's tweaking their AI chips to be sold to China, as per The Information. Okay, so this is cool, but I don't think this makes a lot of sense because Trump has banned them from selling chips. He did not just ban the H20, he banned them from selling chips. I don't know if NVIDIA gets to make a crappier version of the H20 and then say we're allowed to sell these chips. So my gut reaction to that is cool, but NVIDIA is part of this trade war. And Trump has said you cannot sell chips to China. So, and I don't even know if China really wants their chips, given they're seeing Huawei start to get some momentum and success. I think I think China might want to prop up their own firm. So this one's, I don't think this pump makes a lot of sense because tweaking their chips to sell to China, they need to get permission to sell to China. TSM right here is up 4.3%. All the semis are pumping on this, but until there's a resolution to the trade war, I don't understand how that's necessarily going to figure it out. Jensen is trying to be buddy with the king. Maybe it'll happen. Well, that's a good point. That's a great point. Jensen was with Trump the other day, and they were in the White House. I mean, there's a world where that's why as a shareholder, I love seeing that because, yeah, I mean, if Jensen can go up to him and just say, hey, man, we got to get this deal done. Now, granted, Trump really thinks there's a national security issue with semiconductors in China, and I think there is as well. It's just the argument is just not that strong if Huawei is going to be developing their own stuff. So you might as well NVIDIA, you might as well have an American company be able to benefit from that. But if Trump really believes ideologically that we need to do our own stuff in America, which for chips, I think we do need to do in proportion to kind of how we think about it based on everything being in China. Everything shouldn't be in China, but maybe some stuff shouldn't be necessarily banned in China. Then that conversation might not go that well. Jensen might not be able to convince him right here. But NVIDIA, 114.25, that is pumping all of these semis. Broadcom is up 3%. Dell's up 2%. AMD's up 1.72. Micron is up 2. TSM up 4. Qualcomm up 1.7. ARM is up 3. And then that's probably helping the S&P. SMCI right here is up 2.14%. S&P, wow, 565. My goodness, dude. Holy crap, dude. Bro, these colors need to be green and red. Dude, I'm working on it. I'm telling the Robinhood team. I already told them that the colors suck. So hopefully they take my advice and they change the colors. But I agree. It should be a green and red, not this like neon green and like weird pink color. But yeah, hopefully we're going to change that. Yeah, the whole market, dude. I mean, if it's look, I don't think the NVIDIA news makes a lot of sense because they're still going to be banned unless he figures out how to negotiate with Trump. But I'll take it. I mean, if the markets want to pump on that, then be my guest. S&P 1.35. Could you imagine getting back to 570 on the S&P? That magic number that we had a month and a half ago. I mean, that would be pretty damn incredible. That'd be pretty damn incredible. Goodness, dude, this is a pump of a pump. This is not too bad. Zach, thank you for the $10 super chat. Can you tell us what Steve's tweet said, please? I must know. He just said Palantir's overvalued. That's it. I'll put the link right here in the chat. It's a long tweet, so I'm not going to read it right here. But yeah, he just said Palantir's over. He went on. He tweeted a Seeking Alpha article basically on Twitter, and so he went super in depth on it. If anyone wants to read it, we're going to talk a lot about it on Palantir Weekly tonight. This is the preview going into earnings on Monday, which is going to be very important for all of us. That's going to be our Super Bowl. But yeah, he ran the numbers and he said, you know what stock Steve likes now? I was so annoyed, dude. Last night he's like, you know what stock I've been thinking of? I was like, what? I'll probably talk about it today on the close. He was like, Adobe. I was like, did you watch Jeremy's video? He was like, who the hell is Jeremy? I was like, the YouTuber financing. He's like, I don't even know that. I was like, because he just sold Tesla to buy Adobe. He was like, no, I didn't watch any video from Jeremy. So apparently Adobe is now very exciting to him. And I'm like, dude, it's Adobe. Like who like so yeah, I guess he'll give a bull case for Adobe. But he started comparing Adobe's and Palantir's numbers. And I'm like, look, you can compare the numbers all you want. No one gives a shit about Adobe. I'm sorry. Like, yes, obviously Adobe is cheaper than Palantir. A lot of stocks are cheaper than Palantir, but people care about Palantir. Speaking of Palantir, 118.89 in the pre-markets, up 2.3%. We are pumping the entire way through. We got 15 minutes until the market opens. Okay, Amazon. So what did Amazon show? Apple, obviously, buybacks was the story, and the tariff volatility ended up hurting them. On Amazon, look, it was a good quarter. I don't think it was a phenomenal quarter, but it definitely wasn't a horrible quarter. 155.6 billion in revenues. That's a beat. 159 EPS versus 136. That's a beat by 17% on EPS. Incredible. And then AWS revenues, they had 17% year over year, over 17.6%. And that's what the market got mad about. But as you can see, we're pumping right now because that is inconsequential. Apple's not pumping because what they said was more consequential. But if the S&P pumps, Amazon will pump. I did buy 100 shares at 190 yesterday. Amazon right here at 192. I mean, who knows? Maybe this thing can pump up to 195 and the street wakes up to their earnings and says it's not that bad. But we're going to have to see how they ultimately think of it. Now, the biggest number to me that people aren't talking about is operating margins. It's at 11, but this is the highest operating margin ever for Amazon in the history of them being a company. Like, I think no one's talking about this. The number was 7.8 in Q4. It has consistently gone up for the past 5 quarters. And now we're at almost 12%. The reason this number matters so much is because AWS has good margins, but then all the stuff they sell from China and around the world, they have like 2% margins, right? Like they sell water bottles and they make a couple pennies on it. So when you aggregate all that, they're becoming more cost efficient. They're able to have more pricing power. Their AI is probably creating more productivities, which are increasing margins. And then you get to a number that's 12%. I mean, what happens in a couple of years when this gets to 15%, 20%? Amazon's going to be printing cash. It's going to be insane. So, and Amazon doesn't buy back their stock. They don't do buybacks. They don't do dividends either. Like Amazon is just growth mode, right? Because Amazon wants to be around for the next 20 years. So they're not worried about buying back their stock. They're worried about how do we keep up the growth. And so from that perspective, I think Amazon had a great earnings. It's just a question of if they can be rewarded for those earnings going into today. Amit, I'm also a Grab shareholder. Do you think the weak currency in Grab operating countries creates lack of interest? Otherwise, this company is crushing revenue when adjusted to USD is the issue. Yeah, I think FX headwinds could be an issue for Grab, but more importantly, here's the thing about Grab. If anyone's not following Gab Growth on Twitter, you should be following him. He has been tracking the company even longer than me. The real issue with Grab and why it's not pumping is because they have a crap ton of cash and the market doesn't know what they're going to do with their cash. Grab went to $3.36 on April 8th. Grab has over $250 million allocated for buybacks. By the way, Robinhood bought back their stock, 7.2 million shares at $46 when it fell from 65 to 45 in Q1. It ended up going to 30, so they bought a bit early, but nonetheless, they believe they were heavily undervalued at $46 and they spent $320 million buying back their stock. Grab went to $3.36. The stock was trading at almost 60% cash. Grab bought nothing. They didn't buy back a single share, not even one stock, bro. The reason for that is because they made 4 acquisitions already. A restaurant reservation platform, Nom24, a leading Cambodian food and delivery platform. They acquired 19 supermarkets in Malaysia, and then a fintech, GXS Bank, acquired Validus Singapore, which is a digital lending platform for SMEs. They still have $6 billion in cash. I think they're getting ready to acquire one of their biggest companies, which is called GoTo. Their competitors in Indonesia, and that merger is going to cost them about $7 billion. They're going to get a $2 billion loan. That's when Grab, I think, has a narrative changing event that turns them into the legit super app of Southeast Asia. So I think the market's not giving them any momentum right now, even though the earnings are crushing it, because they're waiting for them to make that move. And it's pretty obvious. The GoTo guy was asked on the earnings, hey, are you guys in conversation? And he just said no comment. Anytime someone says no comment, there is a comment. They just don't want to make it. That was very intellectual, right? We got to take that. Someone's got to write that on a book or something. They obviously can't comment on it because something's happening. And so we know about that. And on Grab's earnings call, the analyst didn't even ask about it because I think it was so much of an elephant in the room they didn't even want to bring it up. So I think with Grab, we got to be patient. There's a big acquisition coming. It's just a question of when it ends up playing out. Where is HIMS right here? HIMS is 37.12. That's up 2.65%. Not too bad. Max 7 are all green except Apple. Apple's down 3. Amazon's up 1, Tesla's up 1, NVIDIA's up 2, Google's up 1.4, Meta's up 2.5, and then Microsoft is up 1.03% right now. So, yeah, not too bad on a day like this. Oh, wow, Bitcoin, 96,895. This was at 97.4 yesterday, so that's down a little bit. MicroStrategy, their earnings were hilarious. They missed on EPS by 14,000%. It doesn't matter because it's MicroStrategy. Bitcoin affects their price. They're up 2.26% right now as well. So pretty much everything pumping and getting some momentum. But Apple, Amazon crushed it. Amazon crushed it. Apple had a good earnings. You can't say they crushed it, but the buyback thesis is, I think, the biggest problem, and that's why people aren't that excited about the buybacks currently right now. So that's what we had yesterday for, and now we're done. Now we're done with earnings. I mean, we still have more earnings next week, and we have obviously NVIDIA, but those were the biggest names in terms of what we had yesterday. Earnings on 5/1. So Roku down 8%, type of earnings. Big Bear AI crappy earnings down 5%. Duolingo great earnings up 11%. Airbnb decent earnings down 3%. Block just disgusting, dude. Just disgusting. They missed by 40% on EPS. I mean, just absolutely hideous. So Block right here, down 21%. Twilio up 8%, good earnings. Instacart up on a double beat, 5%. MicroStrategy, Bitcoin's affecting them. Atlassian, crappy earnings, down 10%. Riot, earnings up 1%. GoDaddy, again, not that great earnings, down 8%. And then Lumen, regular earnings, that's up 2.2%. So Amazon's up right here. Apple's down. All these other growth stocks were relatively flat. Now, Reddit had a great earnings, but I figured out what happened with Reddit because Reddit right here is up about 3.4%. Reddit was up 20%, and then Reddit fell from that 20% level. Why did that happen? Well, Reddit said that the Google antitrust stuff affects them. Reddit said that if Google search, if the Chrome browser gets split, then they're going to be massively affected. And as a result of being affected, they said they basically said, hey, we're giving guidance, but expect our guidance to take a big U-turn if Google gets affected, because we get a lot of people go to Google, they type in their result, and then they put Reddit after it. That's how Reddit gets all this traffic. Their argument was if that has any level of disruption via their LLM, their search overviews, or just them getting broken up from the Chrome browser, that is a big issue for them. And so that's bad. Also, yes, Connor, great point. Their increase in April DAUs was in high teens. So the market expected like 30% growth. They were at like 17%. And so those two numbers came during the call. That's why the call is so important, because the numbers were great. Stock pumped, profitable, 30% or 60% year-over-year growth, yada, yada. And then he said, hey, this Google thing could be an issue. Our DAUs for guidance in April is not what you guys probably expected. And then the market was like, okay, so this business isn't growing as much as we thought it was going to grow. So there you go. 6 of the 7 Max 7 earnings are now done. And we've just got NVIDIA left. For everyone asking about the apartment hunt, yes, if you missed it yesterday, I got to view an apartment, and I think we found it. I already put in my application fee. I will probably be putting in my security deposit on Sunday. And I think we got the job done. So very excited for it. Move-in is going to be in August. We still have to get everything approved, but found it yesterday. It was just, it's been 5 months of hell, like literal hell, trying to find an apartment in Jersey City. Not New York. Jersey City, for those that don't know, is like a 15-minute train ride from New York. And it's been really tough, dude. It's been really tough to try to find an apartment. It's very competitive. I got very lucky yesterday, got off the wait list right before another guy almost got off the wait list. Immediately texted the apartment back, and then I left right after the market opened to go see it. So hopefully August is going to be fun as we get in there. It's going to be cool. It's going to be super. I think it'll be, we're all going to be moving in together. It'll be a really exciting experience as well. So yeah, that's be fun. And for those asking for the London meetup and the Houston meetup, again, I will give all the dates pretty soon. I'm still trying to figure it out on myself. Sonny, thank you for the $5 super chat. Sonny from the H. I understand why you're asking when is the Houston meetup, because you're Sonny from the H. You're probably from Houston here. Probably next week I'll have real details. I got to plan it out over the weekend, get everything situated. And yeah, next week we'll get some official details on Houston. And then for the UK, I need a couple weeks to figure that out, but looking like mid-June for the UK. So that's what we're thinking about here. Do you need a roommate? No, I'm going to be very happy having my own spot. It's going to be 2 bedrooms, and it's cool, dude. It's on the 17th floor. This view is crazy. I mean, like, it's what I've worked for the past couple of years. I'm not a materialistic guy. This is my freaking, been wearing these for like 4 years, bro. I'm not materialistic. I don't spend money like that. But an apartment is something that I've always dreamed of. Like always, since I was a little kid, just having that really cool apartment. And we don't have the skyline view of New York. We're not there yet, unfortunately. We just weren't able to get that beautiful skyline view, but there is a hell of a view. And so we'll work up to the skyline, but very, very excited to move out and excited to be there. I'm not going to say what the rent is, bro. The rent's up there. I don't want to say what the price is for the rent. All I'm saying is worked really hard to be able to get here. And for those saying buy it versus rent, I mean, look, I've done all this math before you guys have even asked me about this math. It doesn't make sense in the situation I am in financially to be able to put a down payment and actually buy a property. I'm traveling so much every month I'm leaving to a new place. I don't want to have the restrictions of actually being at that property, taking care of it, all that stuff. The rent is a tax write-off to an extent. So there's a way that I can navigate that. That's good for me. And then 2, I have some private investments that I think in the next 3-4 years are going to do very well. I'd rather liquidate those by the time I'm 30, I'm 27 right now, to then buy a real property. Not take stocks, not sell Robinhood and Palantir to put a down payment on a house. So from that perspective, rent, I've done the math. And by the way, ChatGPT has helped me with the math, but not like, dude, I've given every scenario to ChatGPT on how this works out from a tax perspective, from like a net worth perspective. And the answer comes down to renting for the next year or 2 makes more sense. Sometimes buying makes more sense. It's just at this stage, it just really doesn't make sense to get into the buying of them. So it is what it is, but very, very excited for the opportunity. And I think the content's going to get a lot better. I think the content's going to get a lot better as we're going to be able to collaborate, get a lot more people involved in the streams. We're going to be close to New York, bro. New York is the finance center of the world. It's going to be very, very cool to actually have access to all these different people in the city. And it'll be fun. It'll be a fun journey. So very excited to take everyone along the journey. All right, here's the last stat I want to show everybody before we get into the market open. What do you guys think? We finally have the data for retail net inflows in April. March was 40 billion. Put in the chat, what do you think? What do you think were the net inflows for April for retail investors? For retail investors, what do you think? I saw the number yesterday and I was like, holy crap, dude. Like, what do you think this was? And remember, April was ugly. April was ugly. It ended up being like less than 1% on the S&P based on all the volatility at the end, but it was still ugly. I see 10 billion. I see 5 billion. I see 50 billion, 120 billion, 45 billion, 50. All right. Most of you guys are getting it right. $40 billion people like you and I threw into the stock market in freaking April. Retail net imbalance in April sets another record, 40 billion. It's a little bit more than 40 billion because March was 40 billion, but like 2 months in a row of basically $100 billion, 80 billion coming into the markets from retail investors. This is why Robinhood actually had a good April. Robinhood said on April, by the way, let me share this right here. Robinhood's April had a great showing in equities and option volumes. And when they said that, I was like, what? I was like, you had an all-time high in freaking April? They said April's off to a great start. Options and equity trading at all-time high, 6.5 billion in net deposits, which was their second largest month ever. I couldn't believe it. I was like, wait a second. In one of the worst months of the year, in the past couple of years, options and equities trading were at all-time highs. And that's because we freaking bought the dip. We freaking bought the dip. So either retail's going to be right and all the hedge funds that de-risked over the past couple of months, really past couple of weeks, are going to be wrong, or we get into a recession and stock market falls back to 5,000 and the hedge funds were right and retail is back holding. I feel like a lot of the worst of it is done. Now, could Trump make it a lot worse? Sure. That's always potential with Trump. But I do think a decent chunk of the pain that we had at 4,800. I mean, how bad would we have to be in a situation? How much volatility would we have to have for this 5,500, where 5,650 we're at right now, to go all the way back to 4,800? Are you kidding me? It's not earnings that are doing that. It would have to be a catastrophic, not even a catastrophic recession, but it would have to be a very easy way for the market, because they pull forward everything before it happens, to forecast a recession, right? And it would have to be a trade war becoming disastrous. And I just think the worst of it, I mean, we're close to deals. We're supposed to be close to deals. How's the trade war going to get as bad as it was on April 8th? You know? So yeah, a lot of bad I think is priced in. That doesn't mean we have to go back to 6,500 on the S&P or something, but that also doesn't mean we have to go back so dramatically down to, like, if you were a hedge fund and you freaking sold Meta at 480, right? Which it got to. And we know that a lot of hedge funds did this. They took down their Max 7 exposure to the lowest in over 2 years. If you're a retail investor and you bought Meta at 480, well, Meta's at 580. Does it go back to 480? And what does it take for it to go back to 480? I think is the broader question. And if it doesn't go back there, then I think this ends up working for retail investors. So that's what we got. That's what we got. All right, here we go. Friday, May 2nd, 9:30. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Let's get into it. Markets are pumping. Non-farm payrolls, 177 versus 133. Way better than expected. S&P 500 up 1% on the day. Amazon goes red. Damn, dude. Amazon, this is incredible. Amazon's trying to hold on to some green. Earnings were, in my opinion, really good. They beat EPS by 17%. AWS missed very slightly, but Amazon right here, 189.54. That's down about 0.3%. Tesla is up 2%. Hoodie, kind of flat, but it's up about 0.5%. PayPal's up about 1.8. SoFi is up 1.64. Meta up 2% after being up 5% yesterday. Palantir back to 120. Back to 1 freaking 20. We got earnings on Friday. We'll talk a lot more about Palantir tonight on Palantir Weekly, 11 p.m. Eastern. But Palantir right here, 120.43. NVIDIA, 114. The information reported NVIDIA is working on finding a way to sell their chip into China. I don't know how that's going to work if there's still a trade war, but if Jensen can talk to Trump, maybe he gets the job done. NVIDIA right here up about 2.4%. Microsoft up about another 2% after being up 7% yesterday. Grab right here up about 2.3%. You got Pinterest up 2.5%. TFC's up 2%. That's a regional bank. And then Robinhood 47.30. Robinhood now going green 1.45% on the day. In terms of the Max 7s, Google is green, NVIDIA's green, Tesla's green, Amazon trying to go a little green right here, 190. Apple, wow. Apple, my goodness, dude. Look at that. 4.8% down on the day. Apple's getting hit. They said there would be a $900 million revenue hit in Q2 due to tariffs. And then Apple also said they're going to buy back $100 billion of their stock. And I think the market is getting tired of Apple just buying back their stock. Apple down 5%. Everything else is going green. I mean, Apple doesn't go 5% when the market goes up 1%. That is very rare. I mean, Apple is 7% of the S&P 500. You don't see the S&P pump 1.2 and Apple go down 5. So that is quite interesting to see. But it looks like the market is fundamentally not intact with the multiple Apple's trading at based on those earnings. The S&P again up about 1.17%. We got Hood right here at 1.6. Amazon, here we go. Amazon's now going green, 191. Apple again still down about 4.84%. You got Disney right here down 2.3. And then you have Ford up 1.67%. All the companies that had earnings yesterday. Let's take a look at them. Roku down 11%. Big Bear AI down 3%. Duolingo up 14%. Duolingo deserves it. Airbnb down 1.4%. Instacart up 8%. Twilio down 2%. XYZ, my goodness, down 23%. I could not believe this stock at $44. I couldn't believe it yesterday. I last time I saw it was 55, so I could not believe it's at these levels. The block at XYZ's market cap is now lower than the amount they paid for Afterpay, which is an Australian buy now later company in 2021. I mean, it is just absurd how bad this stock has been, and it's just gotten ruined at this point. Atlassian right here, 8.3%. That one's also down. Didn't have the best earnings as well. Palantir, 120.86. I think we hit 121. Let me check resistance in a second, but I think we just hit 121. We are very close to hitting that again. And then NVIDIA doing its thing right here. 115, 114.90 on NVIDIA. All right. On a Friday, market is starting to like some of this momentum. Airbnb is down about 1% right here. Amazon again at 189. That one can't hold on to 190. Palantir, 120.78 on the day. Rheinmetall all-time high. Wow. Rheinmetall all-time high. Let me pull that stock up right here. RNMBY, right? Do we have it here? RNM. Yeah, here it is. Wow, look at that. 354 on Rheinmetall. Dude, why didn't you guys tell me to buy this in January? How did my Germans in the chat not tell me to take a look at Rheinmetall? It's pretty incredible, dude. Pretty incredible. Rheinmetall. You'd think you'd let someone know about this one. NVIDIA, 114.94. That's green. Apple, still down, 203. Reddit, again, Reddit had a really crappy guidance. Reddit right here. Wow, down 4%. Reddit was at 150 almost yesterday after hours, back to 114 on a just disgusting guidance report, even though they had good earnings. Roblox crushed it, dude. Roblox really did crush it. I saw a stat about Roblox. Roblox is doing like half the watch time that Netflix does in gameplay on their platform. I didn't know people care that much about Roblox. Does anyone have any kids in the chat and that play Roblox all day? I could not believe that stat. Netflix is like Netflix, bro. Like everyone in the world watches Netflix. And you got Roblox doing half the Netflix watch hours with kids playing these, I guess, pseudo metaverse video games on Roblox. I could not believe it. But apparently this thing is like the platform for people to play video games. So yeah, 100 million DAUs. I mean, that's not monthly. That's DAUs, you know? That's not monthly. That's daily. 100 million come back to freaking Roblox. I've never played it. I've never even opened. I don't even know what it looks like. So it's pretty incredible. But that's what you got right there on Roblox. Now, Take-Two Interactive, these guys, Grand Theft Auto. Also, let me know in the chat if people have played this game. I used to play Grand Theft Auto Vice City on a Sony PSP. That was my only experience with it, like 15 years ago. I never actually like played it on PSP or Xbox or anything like that. But they're down 7.48% because Take-Two Interactive has delayed Grand Theft Auto till May 26, 2026. And so it was supposed to come out in the summer of 2025. That has been delayed. And that is what's not really helping Grand Theft Auto here today. NVIDIA 114.72. SMCI is up about 2.4%. Qualcomm's up 2.3. TSM up 3.5. ARM up 3.42. Where's the S&P? S&P still holding on to 1%. Got a little bit of a red candle right there. It was up almost 1.5. Now it's up 1. So you're seeing some red candles across the board. Whereas Tessie is also getting a red candle. There she is. That means Apple should be getting a worse red candle. There she is. Apple now down 5%, $2 away from going below 200, which is close to those April 8th prices on Apple, even though the market is not April 8th anymore. So we're getting some red candles on that across the board. CEP, this freaking Bitcoin thing. I was going to say Ponzi, but whatever you want to call it. It is up 5%. Cantor Equity Partners. Dude, the premium on MicroStrategy is 2.5x. The premium on Cantor Equity, from the numbers I looked at yesterday, is over 5x. I don't know how that's accretive to Bitcoin, because you could buy IBIT and not have to pay any premium and just buy Bitcoin. But you're paying a 5x multiple for a Bitcoin company to try to get you more Bitcoin yield. And I don't think we necessarily know how they're going to do that. But that one is definitely, it's Lutnick coin, basically. That one's taking a hit. A lot of you guys say your kids play Roblox. Wow. A lot of you guys say that. Apple is down because they cited a $900 million hit to the revenues in Q2. And so that's what I think the street is upset about. Granted, I don't think the street's going to care that much over the long term. It'll recover. But as of now, it's just interesting to see Apple down and the S&P's up. That usually doesn't happen. They usually go hand in hand with each other right here. You got AMD right here, up about 2.4. Amazon goes down as well. Amazon, just the street's just not liking those numbers, even though I thought they were okay. Starbucks right here, up about 1.26%. Again, the Max 7, all of them green except Amazon and Apple. Tesla holding on a little bit right here at about 1.65%. Where is Hoodie? Hoodie back to 48. Okay, there we go. A little bit of momentum there, up 3%. Nice to see. And then Palantir holding on to 120. All right, let's do this poll in the chat. We'll talk more about it later today, but let's do this poll right here. Here we go. Let's see what you think. Palantir on Monday. Pump or dump? What do you think? Palantir on Monday. Pump or dump? Pump or dump? I kind of think it's going to be flat more than anything. I know that's a cop-out, but I do think there's a world in which the numbers are good and the market doesn't hate it, but the market doesn't want to give it even more of a premium. Palantir back to 120 right here. But pump or dump, what are we getting? It's so funny. Some of you think it's the most overvalued company on the planet. And then the rest of you think, well, 150 doesn't sound too bad. You know, it's like, it's hilarious, bro. It's hilarious. I need to find that meme on my phone. I shared it a long time ago of the picture in Reddit where, oh, here it is. I found it. Yeah, dude, this is the good thing about Apple. That search function in the iPhone, phenomenal. You can search any word and it'll scan your photos for it. This is like one of the best features they have. This is why they're worth $3 trillion. Look at this. This thing is hilarious. Look at this. Watching how investors complain about overvalued Palantir is. Dude, this has been all of us. In 2024, this was all of us. Like, we were just sitting, seeing our net worth explode, and everyone's telling us this makes no sense. And we're just like, well, yeah, it is what it is. There it is. You're not going to get me saying Palantir is cheap. It's not cheap, but I've acknowledged it is a unicorn, and some companies just trade in a fundamentally different way. And that's why I think Palantir is getting this multiple. Palantir right here, 120.71, up about 3.89% on the day. By the way, Apple is a pure example of this happening. Now, obviously, is Palantir more expensive than Apple? Yes. Is Apple one of the biggest companies in the world? Yes. But Apple is trading at an insane multiple for barely any growth, if they've basically 0% growth. And the only reason they're showing EPS growth is because of buybacks. So it's not absurd to see the market say, hey, we will buy this stock, even if the multiples make no fundamental sense if you went to a valuation expert, for some other type of reason. And for Apple, that reason might be because it's Apple. For Palantir, that reason might be it's Palantir. And that's it. And so I don't know what's going to happen to the stock on Monday, but I just want to see the company progress. And if they do, I think the overall thesis will continue to get stronger. Tesla right here, 284, that's up 1.5%. Google, 163, that's getting some love. And then Meta, 582, that's down about 1.833%. The chat says valuation expert. But it's true, right? It's like a lot of the valuation guys that are on Twitter all day freaking screaming about Palantir. I mean, like, there's a reason they didn't buy at 20 or 30 either, right? It was the same argument. It was valuation. And it's like, you have to have some humility in the markets, right? Everyone gets humbled. Everyone. I've been very humbled by Netflix. I've always thought Netflix was expensive. Didn't understand it. What does Netflix do? They keep growing. Netflix is trading at 50 times earnings. NVIDIA, which we don't need to go through the exact comparisons, but we all know the net income margins in comparison, the free cash flow rates, the growth rates, top line. NVIDIA is trading at 25. How do you explain that? Well, there's something else other than valuation that the street cares about when it comes to Netflix. It's the same thing with Palantir. Same thing with Apple. And so I think like everyone has to get humbled at some point in these conversations. And for the Palantir bears, it's been about Palantir. NVIDIA right here, 114.90, AMD at 99.24, Micron at 80.17, SMCI at 33.46. And then you got Marvell right here, up about 3.2%. Broadcom up 2.71. Currently here right now. Is Palantir at 121? Are we there? Did we get it? Did we get it? Wow. We got it. We got it. I think we hit it really quickly in the morning and then it gapped down. Let me check resistance right here at 121. Resistance is looking pretty damn clear. Going to 122, if we wanted to get back there, there are not a lot of shares, folks. At 122, 64,000, which for Palantir is not a crazy wall. It's not like it's 500,000 shares or something. So if she wants to go for it, there is a shot. Microsoft, again, retakes #1 market cap from Apple. There you go. That's what you got on Microsoft. Oh, money market funds. Let me check the data. Dude, every Thursday we have so many earnings, I forget to look at money market funds. So let me pull this up real quick. All right, what do you guys think? Put it in the chat. Up or down on money market funds? Up or down? Did we increase or decrease? Increase or decrease? Okay, I have the number. What do you guys think? Increase or decrease? Increase or decrease? HIMS as well, doing its thing right there. Look at that, 38.20. That's up 5. HIMS is one of the most volatile. By the way, do you guys know how ridiculous the covered call premiums are on HIMS? I'm thinking of buying HIMS just for the damn premiums. I mean, I already know it's undervalued. You guys have made that very clear to me every day about how undervalued it is. The premiums on this thing are insane. And it's very hard to find a stock that is actually undervalued, is really growing. You can trust the management. And their premiums are ridiculous because the options, like you can do that in the MicroStrategy options are juiced up, but it's freaking MicroStrategy, right? Like if Bitcoin tanks, like it's done. In HIMS, it's a real company. They're growing. There's actual revenues. There's cash flow, et cetera. And they're cheap. So, I mean, this stock for wheeling, and if you have to hold some HIMS shares, if you get put some stock on cash credit puts, that's also not the worst thing in the world. So Mark says, oh, I do. I'm selling them like crazy. Wow. All right. So I found out yesterday, I was looking at the premiums. I was like, holy crap, dude, the covered call premiums are ridiculous. So I would imagine people are taking advantage of that. All right, money market funds decreased by 4 billion. Money market funds decreased by 4 billion. So it's a relatively inconsequential number, but it is a decrease, which is nice to see. So we had some money potentially leave those funds and maybe come into equities. But that is the number. Last week, I think it was a decrease of like 17 billion. So we got 2 consecutive weeks of decreasing. NVIDIA right here, 114. ASTS, another space company, they're up, wow, 15%. What's the deal on ASTS? Is Rocket Lab pumping because of that? Rocket Lab's at almost 23. I'd imagine ASTS had an announcement today or something that's getting people excited. The 10-year's up. Yeah, it makes sense for the 10-year to be up because, people are selling it to buy stocks right here. Amit, would you sell NVIDIA to buy Netflix or Spotify? I wouldn't do that. I think Spotify, Netflix, if we have a recession, might do a little bit better than NVIDIA, just share price wise. Wow, Spotify. Look at that. Earnings missed on a couple metrics, but Spotify up 6% now. But in general, I think NVIDIA is just undervalued. And also, by the way, dude, you could sell calls against NVIDIA to get, the NVIDIA premiums are also very juicy. And if you have to bag hold some NVIDIA, it's freaking NVIDIA. It's not like you're bag holding some stock where there's just, it's done. It's the epicenter of the AI revolution. And if you can play the call premiums, then the volatility of it can just make you money and reduce your adjusted cost basis. So to me, NVIDIA is not scary at all, even at these levels, especially with the calls. But Netflix and Spotify, just from a growth perspective, aren't that interesting compared to NVIDIA. Google has a stake in ASTS. Yes, that is true. That is true on Google. I don't see the headline on ASTS though. It's just pumping. Everyone's just posting that the stock is up, but no one's posting why. I'm sure there has to be something here, but not sure. You guys saying Grab is pumping? Where's Grab? What does pumping mean? Oh, wow. No, that's a real pump. Dude, we haven't had a 5% day on Grab in a while. Okay, so I think given the non-farm payrolls were so good, the market's finally giving some love to all these stocks that had great earnings over the past couple of weeks. Like a Spotify, like they had a good earnings. It's just they missed on users, right? And then they got hit 10%. That's not what's supposed to happen, right? So market's kind of catching up and giving a lot of love to some of these companies right here, and except Amazon and Apple. But maybe Grab is just delayed reaction, and $4.97 right here on Grab. Archer's up 5%. Yeah, Archer as well. Yeah, I'm saying everything's getting some love right here. Let me check resistance on 5. By the way, Pounter not slowing down, baby. 121.22. Continuing to pump. Grab resistance at $5 is 288,000 shares. All right, so we need a whale to get rid of that wall, but it's possible. Google took a 4% stake in ASTS. Is that helping Googs? Today? Yeah, Google's up about 1%. Tesla 283, relatively flat. SoFi up 1%. I caused a ruckus last night, let's say on Twitter, around SoFi and Hood. Dude, someone tweeted at me, Hood is a tool, SoFi is an ecosystem. And I got so mad. I don't do a comparison between SoFi and Hood on Twitter because I know that it's going to start a mess. It's going to start a war. And so I just stay away from it. Last night, I said, screw it, bro. I said, you know what? I'm writing up a post. And boy, did I write up a post, and I pressed post and I didn't look back. And yeah, after watching all these World War II documentaries, I decided I wanted to start World War III. And no one had a good argument. I'm not going to go into everything I talked about, but it's a simple point. SoFi did $2 billion of deposits in Q1. Let me say that again. SoFi did $2 billion of deposits. Robinhood did 18. What are we talking about here? One-stop shop versus 9x the deposits on a silly brokerage app. And the argument is not bearish SoFi. The argument is to that person who felt compelled to tell me that Hood is a tool, a toy, and SoFi is an ecosystem. What type of ecosystem is doing $2 billion in deposits when the toy is doing 900% more? And I looked at all the arguments that people were, I'm like, oh, no one has a good argument. Like, just no one had a good argument. Their best argument was, oh, Hood is a brokerage, so people bring in money from their assets and they're transferring, and SoFi's direct deposits. I'm like, what are you talking about? SoFi's a one-stop shop. SoFi's supposed to get money from everywhere. And if we can't come, am I supposed to break up the asset transfers versus the brokerage deposits on Hood to make this a fair comparison? I thought it's Hood versus SoFi. Like, how are we not supposed to compare the one-stop shop versus their biggest competitor in fintech? It's insane. It's ridiculous. Like, what are these semantic nuances to get out of the point that there is a 9x difference? Probably because the product is what's leading the innovation and the growth in Hood, because you have a founder who actually cares about the product versus a consumer app that really doesn't care. So again, I'm not going to get super into it, but I just I started a war last night because I was done. I was tired of this shit. I was like, this is ridiculous. So Amit, you ain't slick. You waited to do this post in Canada so that Tanner wouldn't make Amit disappear in Canada. Yeah, Tanner's response on the post was like, oh, you're looking at MAUs, that doesn't matter. I'm like, hold on. Noto says he wants to build a top 15 tech company. You know the top 15 tech companies that I know about? They disclose their monthly active users. Meta has 4 billion daily users and they still freaking disclose their. Are you freaking kidding me? Like that response pissed me off even more. Like, wait a second. Top 15 tech company ambitions, but we're not going to disclose how many people use our app every month. Okay. Robinhood, by the way, 25 million users, they disclose only 14 million use it per month. So it's a crappy number compared to their overall user base, but they disclose it. Why? Because you kind of have to. If you're a tech company, you kind of have to show that stuff. And if for anyone who says, oh, monthly active users don't matter for SoFi, what are you talking about? How do you not want people to come back every month and at least open the app? Like what do we say? Like, because I don't, this 800,000 number they added, I think there's like barely any people that are actually using it. And I think SoFi knows that their numbers are garbage and they don't want to show it. Who would want to show 100,000 people use it per month after we added 800,000 people? So SoFi has what, 11 million people? What if only 2 million people show up a month, or 1 million or less than that? I mean, come on, bro. Top 15 tech company, but we are not going to disclose our users. Like Netflix is not doing that anymore because it's Netflix. You know, it's a $500 billion company at this point. SoFi is like 8 billion. Like, you tell me they can't, like, I don't want to get into it, but it doesn't make sense, dude. It doesn't make sense. And sometimes I feel like I'm talking to people who are delusional. That is not bearish SoFi. I hold my SoFi. I think they're undervalued. I think they can get to 20 by the end of the year. But to say one is a tool and one is an ecosystem, I mean, I couldn't believe that argument. It didn't make sense. Robinhood right here, 48.74. That's up 4.5% on the day, getting some love. PayPal's up about 1%. And then Tessie right here, up about 0.52% as well. Wow, Spotify, dude. I don't know if they announced anything today, but Spotify up $40, 7% on the day. It's pretty damn incredible. Hims, again, look, shout out to the Hims people. I sold at 40. Looks like Hims wants to get back at 40. So I might not get my opportunity to buy back in, but Hims right here doing incredible. What else do we have right here? Where is NVIDIA? Again, that information news was a little bit pumpy for NVIDIA. 114 still holding on 2%. Google 163. And then you got Palantir just chilling at 121, still holding there. Sherp says, I moved 6-figure portfolio to Robinhood because of the 2% match. If SoFi gave 2.5%, I would leave in a heartbeat. See, but that's my point. That's what people are telling me. People are like, oh, well, Robinhood's only doing it because of the 2% match. First of all, two things. Number one, 18 or 15% of the deposits of the 18 billion in February or in Q1 were incentives, which means 85% were just people transferring money from their Bank of America or their JP Morgan into Robinhood. So you can't say that's an argument, because if it was 50%, I would get, but it's less than 15%. That's what the CFO said. Number two, SoFi is never going to give you 2.5% because they don't have the unit economics to be able to actually offer that type of incentive, because they're not a tech company. A tech company has fixed costs, very little variable costs, which gives them the ability to have these types of incentive structures. But SoFi doesn't have that because they're not a tech company. So they can't actually innovate in regards to the incentive asset ACAT transfer policy that Robinhood has been instituting, because they don't have the tech component to it. So when people are like, oh, well, Robinhood is just doing it because of incentives, I was like, yeah, because they're a tech company that figured out how to do it with incentives. Like, if so, that's not Robinhood's fault that the one-stop shop can't get you to bring your assets onto their platform. A, you probably don't want to bring it on the platform because the platform sucks, the Invest platform. And then B, they can't give you an incentive because they don't have the unit economics to figure that out, which means they're not a one-stop shop. They're a good place for lending and using it as an online bank, but the one-stop shop thing is not playing out. So every argument I got yesterday, I was just like, oh, these arguments are bad. I was like, these are not good arguments. Every single one of them, like, all of these arguments suck. They're not good. And if there's good arguments, I would acknowledge them. But every single argument was just like, what do you really? We don't need to disclose users? Really? That's your argument? We don't need to talk about monthly active. Okay. All right. I guess that's not important for a top 15 tech company. S&P right here, 0.89%. That one is now down about 1%, or it's down about 0.7%. You didn't respond to half of them? Nope, I did. Tanner, I sent a freaking essay to Data-Driven Investing last night. I think the thing is about these SoFi bulls is they read my stuff and they just want to look past it. They don't want to actually read it. Because then I get other comments by people that don't even own Hood, and they're like, yeah, Amit, this makes a lot of sense. And then you got all the SoFi people under the SoFi bulls posting, oh, Amit got crushed. You know what they're doing? The most hilarious thing is they're like, hey, Grok, hey, Perplexity, who won? They'll like tag Grok and Perplexity, and because it'll analyze like who won this debate. And the AI will be like, well, the SoFi bull has a very good argument, and Amit's making. And I'm just like, the AI is stupid too. The AI is stupid too. The AI is dumb too. Like they're really using Grok's analysis as the foundation to be like, Amit lost the debate. I'm like, okay, buddy, if you want to use Grok, you can use Grok. Because the reason why Grok is picking the SoFi guys and why it's really funny is because the SoFi argument is how you should say logically congruent, but it doesn't look at the deeper nuance of what it means for a tech company to actually scale. And if it did, then you would understand the Robinhood thesis. A lot of these SoFi guys didn't. They disrespected the Robinhood thesis 2 years ago, and they're still disrespecting it. Sometimes you need to look past the artificially intelligent way of looking at a logical thesis and go deeper. And when I go deeper, the AI can't really grapple with that. So what I'm trying to say is like the AI is just like the AI is looking at it at a surface level, and you have to be you had to be creative to invest in Robinhood over SoFi. Otherwise, you would have thought Robinhood's a shitty brokers that anyone could copy, and SoFi is this one-stop shop. If you had some creativity in you, you would be like 2 years ago, oh wait, no, Robinhood, there's a moat here around their user experience. That's why I'm going to invest in Robinhood. And the AI is not going to recognize that. So that's where I don't think the argument makes that much sense. Amazon 187, that's down about 1.19%. That's down. Palantir is still pumping 4.5% on the day. My goodness, I think 122 is on the cards, dude. I think it's on the cards. Robinhood, by the way, 49. You're getting some momentum right there. 122 resistance on Palantir is 63,000. 63,000. And Hood for 50. Hood for 50 resistance is what? Resistance is, give me a small number. Give me a small number, baby. Give me something easy. 41,000. Okay. Those are actually easy for Palantir and Hood to overcome. Those are actually really easy. We just got to see if they get there. We just got to see if they get there. It could happen, bro. 50 and 122. It could happen today, especially with the markets getting some momentum. S&P right here, 563. Do we have any other data today? We already had non-farm payrolls. That was good enough. Do we have anything else today? Euro area inflation is at 2.2%. That's steady. Indonesia inflation is at 1.95%. That's actually an 8-month high. But it seems like that country wanted a bit more inflation because they had deflation. So that's not the worst thing in the world. What other data? Oh, we get factory orders at 10 a.m. Okay, we get factory orders at 10 a.m. The market wants a 4% growth in factory orders. So in about 3 minutes, we will see factory orders and see what we got. Oh, total vehicle sales. Wow. Total vehicle sales in April. We sold against expectations on vehicle sales 17.2 million. The market expected 17.83. Or sorry, no, in March we had 17.83. The expectation was 15 points. Wow. Expectation was 15.7. We sold 17 million vehicles. How many of those were Teslas? How many of those were? That's the big question. All right, cool. So people are buying cars. People are still buying cars. That's not horrible. That's not too bad. That's not very, is that recessionary? That's not crazy. Delta, by the way, look at that. Delta's up 5%. The airlines are pumping today. Are you kidding me? United Airlines up. Why are the airlines pumping? They didn't even report earnings. Hold on. What companies reported earnings today? The airlines pumping is not horrible. Newsmax says Trump is going to name Kyle Rittenhouse a special envoy to lead China trade negotiations. What? Okay. I guess Kyle Rittenhouse understands China. All right. For those that are international and don't know Kyle Rittenhouse, he was involved in some pretty serious controversies back in 2020. I don't want to get into it. I mean, you guys can search him up if you care, but he's one of the last people I thought would be in the room with China. I did not think he would be leading China to go there. We don't know if that's true yet. That's a Newsmax headline. We got to see if that's confirmed. Granted, Newsmax is really close with Trump, so I would trust them to think that their sources are accurate. It's a bit weird, but I guess we'll wait until the administration confirms that. We had Fubo earnings today. Wow, Fubo. What an EPS beat. 55 cents versus negative 9 cents expected. They missed on revenues by about 2%. Fubo stock right here. Goodness gracious, dude. They beat on EPS by 700%. Why is this stock down 14%? Why is this stock down 14%? You're saying you fell for fake news? Well, has the headline been non-confirmed yet? I mean, I'm just reading the headline. I'm not I don't know if it's fake news or not. I'm just reading. By the way, it's Newsmax. Newsmax is like a Trump channel. So they don't have, it's not CNN, you know? I don't know if it's fake or not, but I also don't know if it's real. It's unbelievable. I would hope it's fake, but I don't know. We're going to find out in the coming weeks. All right, factory orders. Here we go. 10 a.m. 10 a.m. Let's see. How bad is it? How good is it? Oh, this is actually not bad, bro. 4.3. Market wanted 4. We came in at 4.3. This is actually not bad. It's not bad, dude. That's good. I mean, that's what we needed. We needed something really simple. 4.3. That's up from 4.0 in expectations. We were negative 13 in April of 2020, so we've moved up dramatically from there. Factory orders X transportation is negative 0.2 versus 0.2. That one is not the best. Don't know how the market's necessarily going to react to those numbers going back and forth. Fubo is down because of guidance. No guidance. Okay, gotcha. That makes sense for Fubo being down 13% right here. Okay, how's the market reacting? S&P, very small red candle. Nothing crazy. That's actually good, bro. That's 4% versus 4.5. That's actually like Robinhood, by the way, still 49.08. That's a number that, again, that with the jobs data kind of tells you that it's hard to think that we're getting into some epic recession, at least right now. But all of this still is before the trade war, right? Or before the tariffs have had an effect in April. So the May data is going to be the most important to kind of see the impact of tariffs on everything going down. Palantir, okay, we are very close to 122. We didn't hit it yet, right? We are very close to it. We hit it? No, we hit it. Hold on. I will confirm right. Oh, there it is. Well, we got it again. All right, 122. 122. We hit it twice. There we go. Hit it a third time. 122. All right. Well, you know what's better than 122? You know what's better than 122? 123. 123 resistance. 52,000 shares. 52,000. All right. Who wants to buy? What's 52,000 times 122? Who wants to buy, or 123? 6.3 million. Who has $6.3 million they can spend to get us to 123? Dude, this is just unbelievable. This is just, I mean, it's pretty incredible, dude. Congrats to everyone holding pat. Dude, congrats. Well, that's all I can say. Congrats. It's incredible. You'll have a lot of people on Twitter, bro, saying it's luck. That's their new narrative. I keep track of all the bear cases. Their new narrative is, oh, everyone just got lucky on Palantir. Okay. Just know that when we were there doing Palantir Weekly every week, when the stock was in single digits, after we're literally helping Ukraine and the stock can't get any momentum, and we're trying to figure out what's going on for damn near 2.5 years, it's a little bit more than luck, in my opinion. Now, did I expect it to get to 122 in 2 years? No. But would I say it's pure luck looking at the stock in the single digits and analyzing it to death to try to figure out what's going on? No, I would say that we put in some work as a community to figure this out. Is it expensive? Yes. You're not going to get me just fine the valuation or like quantitatively, but there is a little bit more to this than just, oh, we picked a stock and got lucky. Like, I don't think so, bro. This doesn't just happen based on luck. This happens on a lot of due diligence on figuring out why Palantir is different. And the stock could tank back to 80 if the earnings suck, or if the earnings are good, but they're just not good enough. That could happen. But still, I think, if you got in early, then you've had a nice ride with momentum. Robinhood right here, 49.26. That's up 5.6%. Tesla, 283. Palantir pretty much outperforming the entire market today. 122.6, 5.5%. Where's Grabby Grab? Can we do a trifecta today with Grab? Can Grab give us, all right, so Robinhood's got to give us 50. Palantir already gave us 122. Grab's got to give us 5. Robinhood and Grab got to give us the trifecta today. Palantir doing its thing right there, 122.52 currently right now. No, I'm not going after Tanner. Tanner didn't say it's luck. Tanner thinks it's overvalued, but Tanner's, me and Tanner always have friendly debates on Palantir. There was other people that are just like, oh, everyone just got lucky. Like this is the comments that I'm seeing now, because now when the stock's pumping, you got all these bears that need to come up with some bear thesis. And I don't respond to them, but I see everything. I want to know what's the sentiment. Why are people, or how are people thinking of it? And the argument now is just like, it's luck. It's not even about valuation. It's luck. It's pure luck. And I'm like, okay. Luck was what got the job done. And the reason I take offense to that is because Karp is such a unique character. And I was so attracted to his personality because I love the philosophy. I know some people hate the philosophy, like they hate his shareholder letters because he's quoting German philosophy. I love that shit, bro. I can't explain how much I love that shit. And you got other people that discount it and say it doesn't matter. And I'm like, that's why you didn't understand this entire story. And that's okay. I got the Netflix thesis wrong. I thought YouTube was the future, but apparently people want to watch premium content, right? People get theses wrong, but I'm not going to call Joseph Carlson lucky for buying Netflix. He understood it. I didn't. So I don't think the same should be reciprocated in terms of, oh, you're just lucky for Pound. It's like, no, dude, there's a different thesis here. There's just a different thesis. U.S. durable goods, 9.2 versus 9.2. That's not bad either. Actual was 10.5 versus 10.4. All right, dude, a lot of this data is coming out pretty nicely. This data is not that bad. Factory orders and the payroll data and the non-farm payroll data, and then the factory order, the durable goods data, all of them ending out to be pretty good. Let's get back to Rick and see him break down this data for us as well.
Yes, Carl, these are March reads on factory orders and our final read on durable goods data. Let's start out with factory orders for March, shall we? Expected up 4.5, comes out 4.3. And even though it's light to expectations, it's a monster of a number, 4.3. That's the best since July 2020, almost 5 years. However, when you strip out transportation, boy, we go from 4.3 to minus 0.2. So we could see that had a huge negative impact. Now, let's go to durable goods. These are finals. 9.2% remains at 9.2. And once again, that's the best since July of 2020. Let's call it darn close to 5 years. But also, once again, transportation's the strength of the day. You take that out, you're back to a goose egg, which is where it was mid-month, 0. And if we look at capital orders, non-defense XR, proxy for capital spending, it held on to its up 1/10 from mid-month. And if you switch from orders to shipments, it moved from 0.3 mid-month to up 0.2 mid-month. And this data really does show us that transportation had a pretty good March, but bringing that to the actual number itself, well, whether it was factory orders, durable goods, once aircraft was subtracted, the growth really dissipated rather quickly. Interest rates, well, let's just look at it on a week-over-week basis. At 3.75 in a 2-year, you're now unchanged on the week, even though you're up a handful on the day. And on 10 years on the week, at 4.27, it's up 3 basis points on the week. Sarah, back to you and have a nice weekend.
And to you, Rick Santelli, with those higher yields, also getting pretty decent stock gains for the week, up 2.5% almost on the S&P 500. Carl, let's talk about jobs. I think that the jobs number was a big sigh of relief on the economy, and at least feeling like things are resilient going into the tariffs and really out of the tariff announcements as well. So here's the headline number: 177,000 jobs added during the month of March. Better than economists' forecast. Another big headline: 4.2% is the unemployment rate. It stayed the same. Participation rate moved up. That was good news to 62.6 from 62.5. That's a sign of strength. As far as those worried about inflation, also good news on that front because the wage data was pretty benign, 0.2% jump in average hourly earnings. We want to see Americans get paid, of course, but we don't want to see spikes because then you worry about inflation. Again, it was a deceleration from March on the average hourly earnings. 3.8% was that year over year number. So add it all up. And I think that there's a bit of a rethink on growth and Fed cuts today because the economy's solid. If you're looking for signs of recession or companies getting really anxious about tariffs and pulling back, you just did not see that in these numbers. You're not really seeing it in the jobless claims numbers either.
By the way, guys, the ASTS pump, I think it's because Google took their stake today, if I'm reading it correctly. I thought Google already owned them, but apparently it's because Google took the 4% stake today. So that's the pump on ASTS, Google actually initiating their stake, and that's why it's getting this momentum. Also, we got this right here. Trump's non-defense spending would be reduced by 23%. His defense budget, we'll talk more about that later, he is going to be requesting from Congress $1.01 trillion from Congress for defense spending. It is going to be the highest amount of money we've ever spent on defense. So the market will react to that. But yeah, Trump's going to be asking for about $1 trillion in defense and 23% less than everything else besides defense.
Either. They were elevated yesterday, but that could have been some quirks on some of the, Easter holiday situation. The job openings haven't been quite as plentiful, but what we're talking about is a very gradual, moderate cooling in the labor market, not some sort of panic by businesses because of tariffs. Now, here's the caveat, Carl. This data, it was compiled 1 week after Liberation Day. So you might have seen an effect if companies really had a big reaction. So that's good news and bad news, because it means maybe there's weakness coming. But the good news is they didn't panic, and they didn't sort of announce like, okay, we're going to have to rethink the entire cost structure. We're going to have to let go of workers. That's been the linchpin of this very good and very long economic recovery, the jobs market. And today's data shows there's not a reason to be alarmed just yet.
True. I think if you were trying to spin out a worrisome scenario, you would look at what we've heard from some of the travel companies, for example, Airbnb last night, Booking, Norwegian. It's not a panic, but
No.
they are talking about softness, and leisure hospitality has been an enormous driver of jobs.
Right.
That's
So
the concerning part.
Question is this just a natural give back? Here's the quote from Airbnb. Glad you mentioned it. We've seen relatively softer trends, which we believe is largely driven by broader economic uncertainty. But you know what, Carl? For every economic uncertainty, softer trends, I can point to one that's actually stronger. I mean, I compiled some. How about Amazon? We haven't seen any attenuation of demand yet. To some extent, we've seen some heightened buying in certain categories that may indicate stocking up in advance of any potential tariff impact. We also have not seen the average selling price of retail items appreciably go up yet.
This is important because if Trump gets rid of the trade war in like a month and a half and Amazon already is not really feeling that much of an impact, which is why I was so shocked that Amazon's down today. It's like if the AWS miss is that consequential, it feels a bit ridiculous. But their actual retail business not getting hit that bad. Definitely not as much as Apple saying we got $1 billion hit on revenue. So Amazon kind of falling after that earnings was just weird yesterday.
So they're not seeing inflation yet, and they're not seeing too much softness in demand yet. Live Nation, we know that's, you mentioned leisure. Concerts have been another very hot spot in this sort of post-pandemic recovery. Whether it's a festival on sale or a new tour or a show that went on sale, it's a complete sell-through and strong demand and beating last year's numbers. So we haven't seen a consumer pullback in any genre: pub, theater, stadium, amphitheater.
Oh, shit. Hold on. We got a headline. Shout out to my boy Gene for sending this right now. Jeff Bezos filed to sell up to $5 billion worth of Amazon. Is that why it was down yesterday too? Amazon, it's down about 1% right here. It's not the biggest deal in the world, but dude, do you guys remember in 2024 when this stock, Amazon, every time it hit some meaningful level of momentum, it would get hit because Bezos would just sell a bunch at resistance every time? I think last time he sold $6 billion, and it really got hit at around 195 to 200, and then finally Amazon broke through 200 back in December. But now it's back down to those levels, 190. So is Bezos going to keep selling at 200? Because then the stock's going to be stuck, at least until he's done selling. So that might be the issue why Amazon's taking a little bit of a hit right here.
That's still going strong. Instacart, we have not seen any unexpected changes in consumer behavior through April. I mean, you're saying good and bad on this front, but I think these kind of bullish comments wouldn't happen if you were seeing this mass pullback in consumer spending. Even Canadian National CEO on freight, right, the railroad, we have not seen a significant impact to our volumes thus far. Or DuPont, manufacturing, chemical sector, we continue to see strong order patterns through April, consistent with our expectations regarding our strategic priorities. So yes, there's some signs of softness, but there's also a lot of signs of not softness and strength and resilience, I would say. And today's jobs number, I think, reaffirms that as long as people have jobs, you know, you're still getting spending. Big question about what happens next and how the Fed's going to take all this.
Yeah, she's right, dude. As long as we still have jobs, people will keep spending. Non-farm payrolls were enough to see people get jobs. Amazon right here, 189.22. So you got the Bezos $5 billion wall. That's going to be a narrative on the stock for a while now. Robinhood right here, 48.76, up 4.5%. SoFi is up 1.7. Pound here, 122.14. Maybe we can see 123, and then NVIDIA getting a little hit right here below 114. Dan Ives, CNBC. All right, let's go to Ives, and let's see what he has to say on Apple and those earnings yesterday.
Still has a buy rating, raises his target from 250 to 270. Dan, happy Friday.
Yeah, great
Good
to be here.
you. Why do you think the street is negative in spots?
I mean, if someone told you April 2nd that you had that quarter $900 million, and the India narrative, Hall of Fame performance, in my opinion, from Cook. And it shows they're essentially playing chess. Others are playing checkers in terms of the India piece. This is going to enable them to basically, what I view is from a production perspective, supply chain, iPhone 17 will be on target. And you talk about all that sort of tornado that we're seeing from tariffs in terms of the price increases for iPhones. They're going to be able to navigate that. So in my view, I'm much more bullish today, even than I was 24 hours
I'm sure
ago.
you would have liked to have gotten some tariff numbers beyond the coming quarter. Yes.
But the fact that they said 900 million, that's
couch money, right?
But it's almost amazing that it's only 900 million. I mean, think about.
I love Dan. He's a friend. He's been on the show many times. I respectfully disagree with this thesis. This is similar to the copium that I was displaying yesterday on why Robinhood is not up 20%. I mean, dude, it's only 900 million. I mean, no, not buying it. I think that can't be the argument. To say it's only $1 billion of revenue that they're getting hit on. Look, it's not Apple's fault to deal with these tariffs, but as an analyst, you got to embrace reality and be like, this is bad. This is happening. And I don't think we can kind of scapegoat the way out of it.
GM, $5 billion, just even given their perspective, it just shows Cook, he's a master when it comes to the supply chain. 10% politician, 90% CEO. So it just shows what Apple's doing here. Look, to lower the price target and be negative here, I don't see it. I'm much more bullish. I get that clients that I'm talking to, the big thing last night and early this morning, why is stock down? I'm just going through in terms of the narrative.
Are you getting pushback from your clients? I mean, that stock is down. I mean, that's a move for Apple, more than 4%.
No doubt. Yeah, pushback, like why be more positive here? What about what happens in September? Can the numbers even be more? My view, Sarah, is like you got to look past next 3 months. You got to understand directionally where they're ultimately taking this. And it looks like India is going to be that life raft in this storm that gets them through. What I viewed is almost just an unbelievable risk if you looked at the last month in terms of tariff and then in the eye of the storm.
What about the fact that there wasn't more clarity on services revenue, the Epic Games suit? Could that be a material risk?
Yeah, my view there, even despite the court ruling, I think that is very minimal in terms of risk to services. I mean, you're trying to find those that actually go outside the App Store to the third party, spend the 3 to 4 steps, and that's going to continue to be pretty small. So I've always viewed this as one where the bigger risk continues to be, whether it's Google or some of the other antitrust, this is something that, to me, it doesn't move the needle when it comes to services. And the services, look, I think that's worth $2 trillion. I mean, look, it is Rock of Gibraltar like as you're navigating. I think we sit here, you look at big tech earnings this week. If you're a bull, you go into the weekend feeling so much better than you have basically any time in the last, call it 4 or 5 weeks, given the numbers we're seeing. Microsoft, Meta, ad tech, AI revolution, cloud, and now from Cupertino, 900 million. I could tell you worst case was going to be probably over 2 billion.
Can you ladder those names? What, given we've gotten some of those big prints, what's your favorite? Is it Microsoft?
Well, you'd have to say Microsoft because what they're doing in Redmond basically shows that was one where Azure acceleration. I mean, that was a jaw dropper in terms of that number. What, if you think about what they're able to do, enterprise, the AI spend, CapEx, and then I think from a number 2, you'd have to clearly look at Alphabet in terms of what we see there relative to what I believe what we're seeing on cloud, digital advertising.
Take a look at that board right there. You see, there's one name that had those misses, and that was Tesla. Today we got April registrations for some European countries. Again, huge declines. But it's not about the car business anymore?
I mean, I've said 90% of the value, as we've talked about on the show, it's autonomous robotics. But that also speaks to, despite, he said, she said, whatever happened with the board, the reality is Musk needed to read the room. He did. It's a conference call that I think changed the narrative, fork in the road moment. He's now focused on Tesla, and I think his days at the White House are done. And that's bullish for Tesla shareholders in terms of the brand damage you need to contain.
Yeah. I mean, that's really a year-to-date spread. Down 30 Tesla, Microsoft up 4. That's interesting.
Look, when it comes to the Trump White House and Doge for Musk, it was a dark chapter for Tesla shareholders. And that's why, however it actually ended up in terms of the the way that this chapter of that book's written. Much better days ahead for Musk and Tesla than the last 3 months, which I continue to view as some dark days.
I'm liking, it's not just the jacket anymore too. It's the shirt and the pants too.
Again, but a month ago, I was wearing black, a little
Yes,
negative. I think we're getting a lot more bullish when it comes to tech.
Yeah, thanks.
I just don't agree with the Apple thesis, bro. The Apple thesis doesn't make sense. It just doesn't make sense to me. So I think Apple can keep going up because it's Apple, but this is... Dan was arguing about the super cycle a year and a half ago. There's been no super cycle. He was bullish on Vision Pro. There is no Vision Pro. Like Dan's got a lot of stuff right, but this one, I don't know, dude. I don't think so. There's been too many narratives that have been shifting because the obvious reality is hitting people that a Vision Pro is not real. A super cycle is not happening. Siri can't even do anything. And so what's left? Buybacks, and then you got a tariff headwind like this. Apple probably goes higher eventually. I just don't know if in the short term you necessarily are excited about the catalyst right here. But if the trade war goes down, I think Apple gaps up 5%, which is kind of what I think Dan is alluding to. Is like once this stuff ends, Apple will be fine, which is why he's not like super scared about it. I just in general think the Apple thesis is lacking outside of the buybacks until they start innovating again, which is not happening right now. Palantir 122, so it tried to go for 123. It was at 122.80, and then it got rejected there. We're trying to see it get some momentum, but it's not there yet. Where's Snappy Chat? Snappy Chat 819. All right, so that's up 4.6. Snappy getting a little bit of love right here. I wouldn't mind selling some covered calls on Snapchat if the premiums are not too bad. My average is like 870. So, I mean, if this continues, then we could see if there's any premiums we can get off this thing. But that one's getting some love. Meta right here, 592, almost back to 600. And then Palantir 122. What did you guys say on the poll? I think I have the same poll, right? 67% of you said pump on Monday versus dump for Palantir. All right, so Monday earnings. This is going to be a very, very important one. And on Friday tonight, we'll go through the weekly and go from there. I love when I ask Siri something and she goes, "I can't do that. Do you want to use ChatGPT?" Yeah, dude. This thing, Apple should have owned the AI LLM voice space. And that just didn't play out. Robinhood, 6%, trying to go for 50. Bitcoin, 97. Hood, I think deserves to be a lot higher based on those earnings. Maybe a little bit of a delayed reaction right here, but nice to see some momentum, 6% right here. And market pumps. Hood is beta to the market. Hood will be able to get some of that exposure as well. Brent, before coffee, thank you for the $5 super chat. He says, listening to you now in Jersey City at the Hendrix at Grove Street. I love the Hendrix. That is awesome. Thank you, Brent, for being here. And hopefully in August, I will be joining you in Jersey City. Dennis says, thank you for the super chat. Is today's Biden stock market? I mean, well, let's just say the negative GDP growth is Biden's market, and then the positive non-farm payrolls is Trump's market. So that's how we're doing it. EC, thank you for the $10 super chat. Bezos needs the cheddar for a big move for Blue Origin. That also makes sense. It's just going to be something Amazon shareholders have to digest. Amazon right here, still down on the day. Where is Apple? Apple still down 4%. Apple still down 4%. Amit, can you ask the chat, what's everyone's biggest conviction stock? All right, let's do that. One stock for the next, call it, let's do timeline 3 years. 3 years. What's the one name? I already know a couple that we're going to see, but who said Costco, bro? Get that out of here. Get that out of Costco. Trolling now at this point. Okay, so for some reason, I see a lot of PLTRs. I see a lot of PLTRs right here. So we got Palantir, obviously. We got a bunch of HIMs. HIMs army is strong. We've got, okay, SoundHound. Can we not do that? We got SoundHound. MicroStrategy. I don't hate that. If you bullish Bitcoin, MicroStrategy is there. Duolingo is interesting. I think it's a great company, great growth. Next 3 years, I'm not sure if they outperform everything. Rocket Lab, I don't hate that one. Rocket Lab's not necessarily cheap, but it's definitely $8 billion, $9 billion market cap. I think that could be 30, 40, 50 over the next coming years if Neutron goes really well. Webull, someone gets Shane out of here as well. We don't use Webull anymore. It's done. We're done with the CCP. A lot of Teslas, a lot of Palantirs, a lot of NVIDIAs. We got some hoods in here. We got some Adobes. We got some grinders. By the way, where is Grinder today? Where is Grinder? It was at 22 yesterday. 2280. Just saying, bro. I'm just saying. We see a bunch of Teslas, Archers, Uber. I don't hate that one either. It's just you got to keep up with if FSD gets them hit. TSM. I'm trying to see different names. See some SoFis. See some Googles. See some AMDs. I got to say AMD. If I don't say AMD, I'm going to have some issues with you guys. So AMD right there, 99.10. By the way, I was reading a thread last night that said most of Meta's CapEx is not going to NVIDIA. It's going to AMD. So I don't know if that's true or not. I was just reading through some stuff, but for everyone who's bullish on Meta's CapEx, it's good for the overall AI sector, but it's really good apparently for AMD. So that is something that I think AMD bulls can definitely hold their hat on in terms of its momentum. Okay, where's Palantir? Oh, we're teasing it again, folks. We're teasing it. Oh, it's 11 cents. Oh boy. Oh my God. There it is. There it is. 123 for Palantir. The 52-week high is 125.41. So, I mean, you know it's better than 123. I mean, you know it's better than 123. 124's resistance is 74,000 shares. 74,000. Well, we got through a couple other resistances that were basically in that 70,000 range. I mean, maybe there's a shot to get there. Congrats to everybody. 123 on Palantir. That was fast. Yeah, that was fast. I'm not ringing the bell. I'm not going to be the guy you guys blame if this momentum stops today. So we're not ringing any bell, but we can all give a little bit of a clap right here for 123 on Palantir. Just incredible, dude. If Steve was here, he'd be disgusted, but still. It was so funny. I remember when Palantir was 50, Steve and I was on Market Open, right? And Palantir was like teasing 51 for the whole day. And then Steve called in, we were talking, and then Steve was like, all right, are you in the stream right now? And I was like, no, I'm waiting for Palantir to hit 51. And he got so mad, 123 again. He was like, what do you mean you're waiting for Palantir to? I'm like, oh, it's like close to 51. I'm just waiting. I'm waiting with everybody in the chat. He's like, this is a stock. It's not like some game that is just you're waiting for it to go up. Like every dollar goes up. That's another $3 billion in market cap. I'm like, I know, but I'm waiting for 51. So he would get so mad if he was like, oh, I'm waiting for 125. I can't leave. Like it would be hilarious, bro. Look, it is what it is. It is what it is. It's Palantir. Don't let anyone tell you it's luck, bro. It's not fucking luck. Do not let people tell you it's luck. Is it expensive? Yes. Could it fall back down to 70? Yes. And I am proud of myself to consistently say that for the past 8 months and not be delusional. Like, oh, it's only going to go up and up and up and up. Because even if that has happened, I don't think you can just say that, right? You lose credibility if you say a stock's just going to keep going up forever. So you have to have some objectivity there. And the insiders and the insider selling also adds to that objectivity of, hey, they're probably selling because they think the price is elevated and they want to take some profits. It is what it is. However, having said that, that doesn't mean that the momentum on the name can't be objectively analyzed. And you can't also be happy that one of your biggest holdings is going up, even if you think it's expensive. Like, I think that's a pretty normal thing to do. You could have a stock that you got in a long time ago. It goes up and it's okay for you to be excited that's going up, you know? So, and also if you want to sell some covered calls, like you got to do what you got to do. You got to do what you got to do. It's a personal financial situation. I know people with a lot of shares that are never selling. I know people with a lot of shares that run the wheel on it. I know a bunch of people that have taken profits over it. Like it is what it is. You got to make your own decisions here. The market is giving you the opportunity to make that decision. You have to decide if you want to make that decision. Insiders have made decisions to sell as well. So the market has decided this is how they want to place Palantir. Now the market could go back on this decision on Monday. They could decide we want to give it more of a premium. But I don't think we chalk it up to luck. I think we chalk it up to this entire journey that we've been in. What I'm trying to say is this is not GameStop. This is not some stupid stock that's just pumping because the CEO tweeted a meme of someone stepping up from a chair. You know, like this is a real business that the market simply wants to pay a higher multiple for it. Just like Netflix, the market wants to pay a higher multiple for it. Maybe the multiple on Palantir is more aggressive, but the point is the market wants to pay that multiple. S&P 500, wow, 1.4%. I don't think we got any news, but the market is, and that's probably why Palantir is ripping as well. The market is absolutely mooning right here, but I don't see the reason why. I don't see the reason why. I'm trying to get some other headlines and see what happens. And again, let me just say here, dude, as much as I love the stock on Palantir because it's fun to like see the stock go up and down, I don't care what the stock, like I genuinely don't. You can believe me or not. I don't care if we go back to 65. I don't care if we go to 150. This is truly a long-term play. If you've been analyzing it for years, then you've been used to stock movements going crazy up and down, and you deal with it. We were down for 2 years, basically at single digits. Now we're going up like crazy. Like it's kind of extremes on both sides. Maybe it normalizes eventually, but this has been the life of a investor who's been in Palantir for the past 5 years. And so it's fun to see it go up, but we also know it could come down. My point is just, it's an entire journey. It's not just always luck that's associated with it. Hood right here, 49.54, Tesla 282. I'm trying to see what is happening in the market to get them so excited right now. I think HIMS is trying to fight for 40, right? Where is HIMS? Yeah, 39.15. 39.15. Let me see what resistance is on HIMS. Palantir got hit at 123, back down to 122. So there wasn't enough momentum there to keep it. HIMS at 40 is, wow, there's only 5,000 shares, bro. I think HIMS could get there. There's only 5,000 shares. And then Archer as well. Yeah, that's up 10%. Look, here's the other thing. I got a lot of these questions, right? Amit, like I get these DMs every day. Amit, I have Palantir. I'm holding on to it. I've been watching you for years, but it's making me uncomfortable. The stock is up a lot. I think I should trim. If you need to use me as an example, use me as an example. I bought HIMS at 28. It was up 40%. I didn't think twice. I sold it. I didn't care, right? So like if it would make me feel more uncomfortable holding on to it. Now I know HIMS is basically right back at that level, but the point is I did what I needed to do for my personal financial situation, which is I didn't feel comfortable holding that thing up 40% in 10 hours. If you think Palantir is up way too much over the past year and a half and you just want to take some profits, do it. Take some profits. The insiders have taken profits, right? So like you are allowed to take profit. If it genuinely makes you lose sleep at night, don't lose the sleep. Your mental health matters more than anything. Especially if you're afraid it's going to fall back to 60 and you're going to miss your golden opportunity. So you really just got to be honest with yourself, and you can't really, follow someone else. You can follow my example of me selling HIMS because I didn't feel comfortable holding it, and you can apply that to Palantir. But at the end of the day, you have to make your own decision. And if you want to hold on for the ride, then you hold on for the ride. NATO chief proposes allies spend 3.5% of GDP on defense, further 1.5% on broader defense-related items. People familiar with the proposal tell Reuters. Okay, so this is another reason why Palantir is up right now. And again, this is what I think the bears that chalk it up to pure luck have never understood. There is a massive government thesis around the reindustrialization of military technology through software led by NATO actually allocating about 3.5% to 5% of their GDP on defense spend. Who do we think is going to get that money? Well, there's going to be a lot of companies, but one of them already got some of that money with Project Maven being utilized inside of NATO. So these are narratives that the stock might be trading on. Maybe it doesn't justify the quantitative metrics of the valuation, but these are also things that you have to be cognizant of, I would imagine, when trying to create a holistic picture of what is the Palantir thesis. This is why Palantir is such an interesting company to cover. It's given us content for 5 years because every single day there is a narrative that is associated, whether it's LLMs, US commercial growth, the boot camps, AIPCon, the NATO stuff, government stuff, everything they're doing to defend democracy in the West. And then obviously Alex Karp and his speeches and his ability to get people's attention, all of that culminates into what we're seeing right now. And then you have the actual reacceleration of growth, which has been obviously very, very strong for Palantir. So that could be another reason why it's happening. Do you think an EU contract is possible? I think Germany and France will have no choice but to be working with Palantir. I think the EU eventually is going to embrace them. I don't know if it happens soon, but the fact that we got NATO means I think it's on the way. Palantir trying to hit 123 again, 122.97. Usually, there you go, 123 again. Usually when it hits a big level, we've seen this every single time, it drops like 4 to 5 times, and then it just goes right back because it gets through that overarching amount of resistance at the desired level, 122, 123, goes down a bit, and then it comes right back. So It wouldn't surprise me to see it come right back. Robin is really trying to go for 50 right here, 49.77. Grab is also 493, and then Snapchat 822. Snapchat trying to get back into that $9 range. But Palantir right here, seeing some momentum. NVIDIA 113. Again, 124 resistance on Palantir is about 70,000 shares. So if we continue to pump broader S&P, that could also happen right here. S&P is green. Hood resistance is at 50. I think it's 60,000 shares. Something like that. 81,000 shares. 81,000 shares. Cyber says, when I heard about the partnership between Google and Palantir, I knew I wasn't selling any shares anytime soon. Yeah, the Google Cloud partnership was awesome. And so that's also another thing that could be helping Palantir. Okay, let's talk about that Trump defense budget. Let me get some coverage on that, because that was big news yesterday in terms of the amount he's looking to allocate for the Trump stuff. This is him talking about it yesterday at the military event, and then we'll talk more about it.
And I'll be supporting a record-setting $1 trillion investment in our national defense. We're going to go $1 trillion, the largest in the world, largest ever in our country, but no other country's invested that much. We have a $1 trillion budget for military this year, and we have tremendous plans, including increasing the scope of Selfridge.
So here's my thing. Look, I think we need to spend on defense. I think it's important. America's safety matters more than anything. But where the hell are we getting $1 trillion from, bro? That's my only question. Like, where are we getting $1 trillion? I mean, is the tariffs gonna that's the part I'm confused about. And what is Elon gonna say? Because I'm sure if you're spending $1 trillion, there's gonna be some stuff you're spending that's probably inefficient. I would just imagine that in $1 trillion, there's going to be some level of waste and fraud. That's just inevitable. Is Elon going to come in and say, hey, we got to audit it? Or is it going to be too politically isolating? Because, Trump's going to be like, screw you. This is defense. I don't want Doge inside of defense. So I don't know how that's going to play out. But if Trump gets what he wants with $1 trillion, the point is, where are we going to sacrifice the rest of the money to get there? And I don't think we necessarily have an answer on that. By the way, take a look at this chart right here. So we talked about retail net flows for $40 billion in April. Check out Vanguard's VOO. I'm sure plenty of you guys own this. It's the world's biggest ETF. Record inflows of $21 billion in April. That's retail buying the dip. I mean, that's incredible, dude. One of the biggest ETFs in the world. Or maybe that's some, institutional money managers that were bullish instead of bearish just bought the VOO when it fell, the same as the S&P, about 15%. But you are seeing a lot of people that decided in April they would take advantage of the opportunity. The tough part is if you sold April 7th, April 8th. I mean, it's tough to stomach that, dude. That's a tough one. Because again, when you get those reversals, it's really hard to get back there, barring really bad news getting priced in. And right now, news should be better. 50 resistance on Hood is 75,000. 75,000. So we need 75,000 shares to get there. Yeah, a lot of you guys are saying, yeah, look at this. I bought VOO as low as 445 in April. There you go. Where is it VOO right now? Let me see. Yeah, 519. There you go. I own the S&P in my solo 401k. So that's where I hold some S&P. I don't own VOO there, but the point is all of those got hit pretty badly back in April. Do we rip on Hood hitting 50 or do we dump? Well, I guess we'll see. It's up 6.8% right here. Markets are doing well, and that momentum is keeping it alive. In regards to, again, Trump defense spending, if we do $1 billion there, either Elon's got to cut in a lot of other places, or we've got to have tax hikes on certain types of the economy that allows us to get to at least break even. Otherwise, the deficit's going to explode, bro. I mean, the deficit's already exploding, but this is going to be 13% over the current year's figure. It's going to be beginning October 1st. And it's just going to be a question of ultimately how they fund it. Pain Care, thank you for the $5 super chat. Am I crazy for selling the 530, 175 Palantir covered call for 115? Hard to imagine it pumps that much. Feels like free money, but is it too little to be worth it? Okay. I don't think you're crazy at all. The fact that someone is willing to pay $1.15 for a May 30th Palantir covered call at $175 is incredible. So no, I would not say that's crazy. Having said that, I think Palantir can pump. I don't think it's going to pump all the way to 175. So I think your shares will be safe. That is a heavy out of the money option. So yeah. And then if you did have to sell some shares at 175, is it going to be the worst thing in the world, right? You got to ask yourself that question. Someone said I sold the 175.9 call for 50. Yeah. Like the fact that someone thought Palantir can get to 170 by May 9th, which look, it could, but I think it's going to be a little hard. So then you got $50 a premium for that. That's why covered calls are such a juicy thing to be able to utilize in your portfolio. Robinhood, there you go, 50. Wow. Boom. Robinhood did its thing. Palantir did her thing. Robinhood did her thing. There you go, $50. We're waiting on Grab to wake up. 493. Grab's going to be harder. Grab's is just not as liquid, but Robinhood got there at 50, broke through that 77,000 share wall, which is incredible. That should hopefully get us back above 50. And in terms of Palantir, the only thing is covered calls in 2024 didn't work because the stock went exponential. Given where it's trading at, I don't know if it goes exponential. Exponential meaning 4 or 5x up in another year. That's what happened in 2024. That's why covered calls got destroyed. Now I feel like covered calls are more reasonable because you're playing the volatility from an all-time high, basically. And so I don't think it's that scary. But you just have to make peace with the fact that your shares might get called away or be ready to roll in a situation where it pumps aggressively past your strike. There you go. 50 on hoodie. 50 on hoodie. People are betting on total amount of Robinhood Gold subscribers next quarter on Kalshi. Really? Let me check that out. That's cool. Kalshi Gold subscribers Robinhood. That's cool. They made a prediction market out of that. Yeah, look at that. Wow. Above 3.75 million, 72% chance. That would be another 500,000 people. Above 4 million, that would be 800,000. Above 4.25 million, that'd be a million. Dude, this predictions market, everyone who thought it was gambling and it's the worst thing in the world, yada, yada. There's so much money in this market, bro. Everything's going to become a prediction market. Robinhood's on a $20 million run rate for prediction markets. And if you really are so morally against it, you can just scroll past it in the app. It's not that serious, right? This was my point when it came out. And if you really hate it that much, okay, you can leave Robinhood, right? If it just disgusts you to such a degree that people can bet on what JPOW is going to do, then you can leave the platform. But I think most people don't care. Most people don't care. Most people just want to do whatever they want to do on their portfolios. And Robinhood is just giving them the tools to do it. That market is going to be gigantic in the next couple of years. That is going to be a multi-$100 million market because everything is going to become a prediction. And it's going to be a way better source of truth than polling data. We've already seen that with the Trump-Harris election. So that is going to be incredible. That is going to be great for Hood. Prediction market for when a Mitt will get a girlfriend. Dude, I should hit up the Robinhood people. I'm like, yo, you guys got to do this. That'll be a good one. Oh my gosh. It's a tool. Yeah, it's not an ecosystem. It's a tool. It's a tool, dude. This is why I get so hyped up about this. It's not to be bearish SoFi. It's just like I see all the people getting like just dismissing all of this. Like the evidence is in their eyes and they're just like, yeah, it doesn't matter. And I'm like, am I an idiot? Like, am I the one who's like, because I bought this thing at 8 and I had the expectation that they would keep innovating and they've done it beyond my imaginations. And you're over here telling me that none of it matters. And it is unfathomable at some of these conversations I'm having where people just don't get it. I'm like, all right, that's fine. Archer resistance at 10. What is the Archer resistance at 10? Archer resistance at 10, 936 on Archer. At 10 is 16,000 shares. The one thing about Archer, guys, that I don't really like is that they still don't have a product. I think people have to remember that. They don't have a product. Like, it's not there. It's not usable. It's not real. And they've been promising it for a while. Now, they have a good backlog, which is good, but it's not in the world yet. So what you're buying is literally potential right now. And I just think people have to remember that around Archer. The actual material reality of what they've done is not necessarily real yet, but that momentum can still get them the excitement of investors. And then eventually if they fall through, that can help the stock. Let's get an update right here on Amazon and then we'll keep going from there.
Amazon's numbers this morning. Sentiment from what we're hearing and what we're reading, largely optimistic. Amazon did post a 23-cent earnings beat, saw some ad strength. The miss on cloud growth, though, plus some cautious guidance, did hit shares last night. As you mentioned, they are turning around this morning. CEO Andy Jassy helped to really reassure investors on the earnings call, tried to frame the trade war as potentially an opportunity, says Amazon has been able to weather other challenging conditions better than others and has emerged through what he called volatile times stronger. Jassy says he is, quote, optimistic this could happen again. Deutsche Bank agrees. They think that Amazon's delivery infrastructure and scale is going to help it outperform in this period. Goldman, meanwhile, calls out past periods of macroeconomic volatility. He says if those are any indicator, they believe that Amazon is likely to emerge even more favorably positioned. And then cloud growth was another focal point, 17% year-over-year growth. That was shy of consensus. RBC, though, calling it just unlucky to report after Microsoft had that big beat on the cloud and really raised the bar. Others calling out capacity opening up and opening the door for more potential acceleration in the back half of this year. Citi still bullish, but warning it's early days of this tariff impact, so they're kind of waiting to see. Barclays calling the results fairly solid, considering the global trade situation, does expect shares to remain volatile until things become more clear. And then Morgan Stanley put it this way. They say any trade deals with China, that's going to be the next revision catalyst, Sarah. So we'll see going forward.
After all that, down 0.5% at this point. Thank you very much, Kate Rooney.
I know.
They had a good quarter, man. They had a good quarter. Not bad at all. They had a good quarter. All right, real quick, guys. I want to do just a quick shout out to one of my boys, and then we'll get back to the show. You guys may know him. Some of you guys have been asking where he's been. I'm putting a link right there in the chat. This is one of my, honestly, best friends that I've met off YouTube, and he's been a mentor to me as well. There's his link right there. So what is this? This is Adam Bergen. Say he's my best friend. I can't say his last name. Adam Bergman, who has finally come back to YouTube. Adam Bergman is back to YouTube. He is a Palantir OG. A lot of you guys know him. He's going to be on the channel probably next week. We'll try to get him on. Again, one of my very, very good friends. And he is now doing a YouTube channel all about option selling. I know a lot of you guys like option selling. You guys have started to get more interested in it. Well, there he is back on YouTube. This video that he put out yesterday, it's really hard to grow a YouTube channel. It's not easy. Adam tried to do it a couple years ago. Then he ended up having some kids. He had to take a break. It was, it's, what happens. Life happens in the way. He ended up making a real good chunk of cash in 2024, like multi-bagger. Some of you guys know his plays, but he did very, very well. And he retired. And he made $1 million off selling options, and he made a lot more than $1 million on a couple other plays in 2024. This video is going semi-viral right here. 6,000 views on a channel that barely has 1,000 subscribers. And so if everyone could please show him some love. He didn't even ask me to do this. This is just one of my best friends. I've had dinner with this guy multiple times. He's been over to my house. We played chess together. I almost beat his ass, but he got me in the last move. He's a really good friend of mine, and he wants to take YouTube very seriously. It's just, the algorithm's tough. It's really tough to succeed on YouTube. And it wasn't easy for him 2 years ago when he was having kids and going through some life stuff. So if anyone wants to check him out, that's his YouTube channel right there in the description. And if you care about option selling, realistically, don't subscribe if you don't care about option selling, right? If you care about option selling, if you care about retiring early, if you care about kind of getting those tips and tricks that he used with covered calls and puts, all that stuff, his channel is literally called How to Retire Early. And he primarily focuses on dividend ETFs, options, all that stuff. Definitely make sure to check him out. So, oh, wow, look at that. We got him to 1,000 subs. There you go, baby. Shout out to Mr. Bergman. We was at 909. We're at 102. I love it. I want Adam to be one of the biggest option selling YouTube channels on the platform. And there's other guys like Invest with Henry. There's all these guys that they have hundreds of thousands of subscribers. So the TAM to get there is possible. But Adam's a really good person, dude. Adam is a good person. Adam told me when I was 21 or 22, when we met, to work my ass off for the next 5 years, because in your 20s is the time of your life where you have to grind. There's no other time other than your 20s where you can really grind and not feel guilty about grinding. Because then you get wife, kids, all that stuff. I know a lot of you guys don't think I'll ever get a wife, but whatever. But Bergman was like, bro, just work. Just fucking work. Just keep working. And I took his advice. I kept working, and so, and that's why we're here. So there you go. His channel right there is called Retired ASAP. It's how to retire early. And so you can check him out right there and check out the content. And it's good content, dude. I talk with this guy every week about option selling. We go through, private conversations of how we manage different positions. And so he's very transparent, giving you all of that publicly right here. And you guys can check him out and get some more content from him. All right, cool. Love it. There we go. Shout out to Adam. He'll be on the show eventually, probably next week. We'll try to get him on the show and he'll try to give us some tips on how he's managing his options positions right now. He is making a certain amount every month. That is, let's just say he's retired, but that amount he's making every month is continuing to keep him in retirement. And he's doing it by pressing a couple buttons on his phone on Robinhood with option selling. Now, granted, he's building off a big base. It's not that easy. You have to have a good amount of money to be able to get a small percentage to be able to make a nice amount per month, but it's possible. That's what I love about it. It's possible. Option selling is possible for everybody. And the fact that it's possible is what really matters. Anyone, you don't have to be the smartest person in the world. Anyone can learn it. You can get started with less than $5,000 and begin the journey. All right. Where is Palantir? Palantir right here, 122.22, up 5.14%. Robin at 49.60. It took away 50 from us. It came very quickly. I know something about that. Palantir right here, 122. Robin at 49.62. NVIDIA, 113.99. And then Microsoft getting another 3% pump today. Not bad, dude. Microsoft freaking 9% yesterday, 3% today. And then Robinhood trying to get back to that $50 level. Let's get some analysis on some of the earnings we had yesterday as well and see what people actually know. Let's listen to this guy, Morgan Stanley. So this is someone that I'm curious about in terms of his current take about the markets. Let's hear what he has to say. He was on yesterday, and then we will keep going from there.
To become more serious. We both know, for obvious reasons, we're not going to have an answer to that question for a while. Does that mean that we just chop around things? We may have some volatility come back. We feel like it's been this nice little sanguine move higher. Everybody's feeling good. As Adam Parker was just saying, everybody was so negative. Now everybody's feeling so much better about everything. But are we due just for more choppy?
That's basically our call. It's a range trade, right? So the low end of the range is sort of 5,000 to 5,200. Upper end of the range now is 5,500 to 5,600. That's a pretty good range to think about in S&P terms. Now, a lot's going on under the surface as usual, right? So a lot of the economically sensitive parts of the market have been correcting for almost a year, right? They've been in a downtrend for quite a while. That's where the value is. The problem is you can't really step into a lot of those stocks if a recession is still 50%. So yeah, it's going to be a trading environment. There's probably some franchises you can kind of go back to that look a little bit more interesting. The weaker dollar is helping the multinationals now.
So same thesis from Mike Wilson. It's not a bull market. It's a tradable market. Tesla up 2.1% right there. And the reason I wanted to play that is because that's kind of what he's been saying for the past 4 months now, which is that this is a tradable rally, but it's not something you DCA and invest into. Obviously, for retail investors, it's a different mindset, right? But that means he's implying there's a lot more pain coming, but you can make some money in the mean term before you get some of that downside. And I mean, he could be right on that if the data keeps getting worse, but he could be wrong on that if we start getting some real deals done. The question is going to be, can we get those deals done in a meaningful way before shit starts hitting the fan? And I think that's what we're going to have to try to see. Here's Goldman Sachs talking about this market, and let's get their perspective here in terms of what they're thinking about.
Very significant risk.
Does today change the odds of recession?
I don't think dramatically, because I think it's a little bit too early. There are a lot of distortions in the data at the moment, especially the hard spending indicators. But I still think that there will be a drag from increases in prices and therefore lower real income, a financial conditions drag, although that's smaller now than it was a few weeks ago, but these things can obviously shift. And then number 3, uncertainty and the impact of uncertainty on, ultimately hiring decisions and capital spending decisions. So I think those things are still likely to hit. In our forecast, that's not quite enough to get you to a recession outcome, but I think it's still going to be a drag.
Question is when we expect this to show up in the data, and how surprising is it that it hasn't yet?
Again, I don't think it's super surprising that it hasn't shown up yet. In the employment numbers, I don't think it was ever close to the baseline that the April employment report was going to show a lot of weakness. You always want to know the numbers, but it's really more a May, June, July type of development. And I think the labor market numbers are probably going to be the most important for telling you whether we're going to avoid a recession, go into a recession. It's going to be important for Fed policy. So that's what we'll be watching closely.
What's the calculus now on Fed policy? This buys them some time to stay pat?
I think so. So we're expecting July now. We pushed that back from June. I mean, I still think that the distribution of outcomes is very wide because it's a genuinely difficult thing to deal with. You have a positive inflation shock and a negative growth shock, and relatively small changes in how big one is versus the other can give you a very different outcome. But
again, all of these guys kind of just trying to figure out when we get negotiations on deals that make a meaningful difference in macro data, but they're still, as you can tell just from the tone of their voice, very hesitant to embrace a lot of the macro data that we're getting right now. Tesla's getting a 2% bump right here. Not sure why. Maybe because just the broader market. Snappy Chat getting a nice 6% bump. Let's take a look at the Snapchat covered calls. Let's take a look at them. What premium could we get? So Snapchat, if I were to sell a covered call for May 16th or May 9th, no, it's disgusting, bro. These premiums suck. It's 5 cents. That's not worth it. It's not worth it. We got to see it get back. I mean, look, I don't think Snapchat deserved to be down to freaking 750. It's 2022 levels. So I think it can come back. But that one right there, covered calls are just not the best with premiums. I can't find Adam's channel. Let me put it here again in the chat. There it is right there. You should be able to find it right there. Is Robinhood Gold Card worth it? I just got access. Yes. My cousin just got access as well. And she texted me yesterday. She was like, should I use this? I was like, yes. You get 3% cash back on everything. It's incredible. It's freaking crazy, dude. Like the amount of money I get to, this morning, I put $8 into my brokerage because it was my cashback rewards. That's $8 more I have to invest just from buying, regular stuff that I buy. So it's pretty incredible. For those that didn't see this yesterday, these were the stats that went underlooked for Robinhood. Robinhood Strategies has 40,000 customers already, 100 million in assets. This product costs $250 a year, whether you have $1 billion or $10 under management. That's what makes it so unique. So right now, Strategies is already ready to make $10 million a year in ARR. That's crazy, bro. That's wild. Prediction Markets, $20 million run rate, 150,000 international customers. They're going to Singapore by the end of the year. 15% of the 18 billion in net deposits were because of the 2% transfer, meaning 85% of the 15 billion or 18 billion were just regular people investing. April, great start. Options equity, all-time high, 6.5 billion in net deposits. And then average account size is 180,000 for people that transferred over. And Robinhood Gold credit card went from 100K to 200K. So we got hundreds and hundreds of thousands of more people, or at least in this case, 100,000 more people signing up to the credit card. And if the underwriting goes really well, then that credit card business can be gigantic. And one of the reasons they can afford, everyone's like, how do they give the 3% cash back? Well, by the way, Bitcoin pumping. They don't have to pay for marketing. The biggest line item when you get a credit card customer is marketing. Robinhood has a wait list of over 1.5 million people. They don't need to do any marketing. So they can afford to hurt their margins more, but then they get to take market share, which is the ecosystem, in my opinion, versus the tool of Robinhood. Bitcoin 97.7. That's great for Coinbase, MicroStrategy, Hood, etc. Where is Coinbase today? Coinbase up 3%, and then MSTR up 4%. Let me check the Bitcoin ETF inflows over the past couple of days. Yesterday was $422 million. Wow. It's not bad, dude. Triple digit days for Bitcoin. It's getting some love. Getting a lot of love right here. Bitcoin 97.7. CoreWeave. So I don't own this stock. Jose said he owned it yesterday. I tend to trust Jose on his opinions when it comes to semiconductors. I don't know enough about it. All I know is that the CapEx increase is good for them too. So all these companies saying CapEx is up. I just think NVIDIA is the most undervalued one. So that is a sign to buy NVIDIA. But these ancillary names like a CoreWeave or like a Nebus, or a Nebius, however you say it, these guys are getting some love as well. CoreWeave, wow, 11% on the day. Market's really starting to like these names a bit more. Red Cat is pumping. This is a drone company. Wow, 14%. All right, it's a small cap. These guys could pump. Serve Robotics getting some love right here. That's up 8%. And then Archer. Again, none of these companies really have tons of earnings, but they're all pumping on a day like this, which means we got to check Fartcoin. So Fartcoin's down 4%, but it's still $1.20. So it's still at 1.2 billion market cap. Still 1.2 billion market cap. Yes, CoreWeave is definitely attached to Microsoft because 62% of the revenues are Microsoft. So the more Microsoft spends on data centers as well is great for CoreWeave. Microsoft right here, 435. Still on the day. Are the quantum names pumping? QBTS. Yeah, that's up 6%. Rigetti, that's up 13%. And then IONQ, that's up 12%. Dude, this is a green day. The fact that Amazon and Apple are red on a day like this is incredible. Apple still down 4% because this is green. Everything's green. Palantir 122.19 currently right now. Tesla, huge pump. Where's Tesla? Okay, so it's up 2.14. I don't know if that's a huge pump, but it's green. Let me see if there's any headlines on Tesla that's causing this. But I think 2% is just it pumping with the market, not really anything different. Fabio says, I had Rigetti, bought before market close on Wednesday, sold today at 10:15. Not bad. Not a bad trade. In fact, Tesla actually had some bad data about France. Their registrations were down again year over year. So I don't think there's any headline that's positive today. It's just like moving with the market. But what's positive is that freaking Tesla had those earnings, and I mean, stock didn't care. Stock did not care. XYZ, this one got hit badly. 21%. Again, this was just ugly. This was just an ugly one. It happens. Sometimes you get an ugly reaction, but this one was pretty freaking ugly right here. All right, let's take a look at this. We have someone having a sell rating on NVIDIA. We looked at a lot of buy side, or not buy side, but people that have, sell side analysts that have buys on NVIDIA. Let's listen to a bear or someone who's maybe more skeptical and try to get their perspective on it as well. Fubo's down 13% because they didn't give guidance. That's why Fubo's down. Thoughts on Path? I'd rather buy Palantir. I think robotic processing automation is cool, but it's not really the future in regards to the AI enterprise growth cycle. So I just don't think there's anything that interesting in Path. But I know a lot of people that got excited about it. Stock really hasn't done much, and the growth is really not there. And then Reddit, where's Reddit? Reddit up 3%. It was down 4%, so Reddit making a little bit of a comeback as well. I don't know much about Nebius, so I haven't looked deep into it, but I know the semiconductor people really do like that stock, but don't know too much about it. All right, here we go. Let's get a bear case on NVIDIA.
Seaport Research hitting NVIDIA with the rare sell rating as it initiates coverage on semiconductors. Seaport noting AI is bringing about a secular shift in the industry. Jay Goldberg, senior analyst at Seaport Research Partners, joining us now to discuss this. Jay, it is great to have you here. So you initiate NVIDIA with a sell. You might, Jay, per Bloomberg, be the only sell on the street. Explain the rating to us, Jay.
Great. Thanks for having me. So put simply, I think the AI story, we've been talking about it for years. We all know about it. It's fully priced into NVIDIA right now. They're a good company. They make great products, but they've said already their newest line of products, their Blackwell line, is sold out for the year. They're capacity constrained. Once you're sold out, the room for upside is pretty minimal. The bias shifts towards the downside, right? There's not much they can do to get above where consensus is, but there are a lot of things that can trip them up. There's lots of small things, snafus. There's a lot of friction in the system, and I think that we should be concerned about those. And that semiconductors are cyclical, and it's important to remember that.
Jay, what about this idea that there might be some sort of potential tariff or export control relief for NVIDIA that wouldn't necessarily affect Blackwell, but could affect some of its other chips?
Well, I think that there's two sides of this tariff story for NVIDIA. One is their cost of importing things from China. A lot of their supply chain comes from Asia. Most of the analysis we've seen shows that impact is fairly minimal, so that the hyperscalers, the Googles, and the Amazons of the world can continue to buy NVIDIA chips and import them into the country at essentially, no tariff or very low tariff. The flip side of that is what's going on in China. China would very much like to get their hands on more NVIDIA chips, but that seems very increasingly difficult in this geopolitical environment. So it's less about tariffs and more about this perceived rivalry between the US and China, this AI race. And I don't see that lightening up anytime soon. And even if that does happen, it's still fairly minimal. I think there will still be some restrictions, so it won't be a quick snapback.
Is anyone buying these arguments? Jose, are you buying this stuff, Jose? You get it? You think there's an argument here? I don't know, dude. Tariffs and cyclicality seems to be the argument.
Jay, on the big tech companies that have reported, it's interesting on CapEx, Jay, and you've watched, obviously. I mean, you saw Alphabet reiterate, Microsoft reiterate, Meta actually raised. That would seem to be all good news for NVIDIA, Jay. So I guess you're saying, yes, it is good news, but that simply is priced in at these levels?
That's right. It's priced in for these levels. And I think it's important to remember what they're talking about is CapEx for this year. It's a little early to be talking about CapEx budgets for next year. But in my conversations I'm having with everybody is there's a growing scrutiny being applied to AI spend. We've had some really, really big numbers this year from all the hyperscalers. I think we're starting to see signs that, I don't think anyone's going to cut drastically, but there are certainly signs that the finance team is starting to ask questions. A year ago, it was all AI all the time, but now the CFO has entered the chat and is starting to ask, like, what's the return on this investment? And just to be clear, I'm a believer in AI. I think there's a lot of potential there. I just think it's going to take us a few years as an industry to really find those compelling use cases. And as we do that, there's going to be, a sort of gravity asserting itself, and people are going to ask, what's the return on this investment? And I think that sets us up for a potential for a pause, or at least a slowing.
Jay, even as you have this sell on NVIDIA, you do have a buy on Broadcom. And of course, Broadcom has gotten a lot of attention as being a company that could benefit from more companies sort of doing custom chips or contract made chips. But when you talk about stuff being priced in, I mean, Broadcom is up about 60% over the last year. NVIDIA is up about 36% or so. So how much of that outlook is priced in?
So I think what I told my sales force is that the AI story is fully priced into NVIDIA, and it's not priced into Broadcom. Broadcom has a lot of other pieces going on there beyond the AI story, their networking business, their software business. But I don't think the street entirely believes their AI story. And we actually saw this. They reported earnings in December, and for the first time, they laid out their opportunity for AI, and it was large. It was a massive opportunity. Anytime NVIDIA loses share today, it's to one of the hyperscalers doing their own chip, and Broadcom makes a lot of money helping them bring those chips to market. Right. So when they laid out their AI story, Broadcom was up 20, 25% on that. Right. And then in January, we saw the DeepSeek story come out, and everyone had a momentary panic that we weren't going to need GPUs anymore. And Broadcom essentially gave up all those gains. Right. And I think there's still a lot of show me built into the Broadcom story around AI. And, the street doesn't believe it. I do.
Jay, thanks a lot. Appreciate it.
Thank you.
I don't understand the idea that everything's priced in. The way for him to be more convincing is to bring up the growth rate. Like, did he mention a single number when he was talking? Because I think when you look at the growth, like when Steve does his NVIDIA analysis, he looks at forward earnings estimates and then the growth that you're paying for, which is why Steve has been pounding the table on NVIDIA, because he looks at other companies and what they're commanding, and the growth is insane. Like Costco commands a 50x premium for the type of growth that Google, for example, can do within 20 days in terms of net income, which is what determines your PE, because it's based on your earnings per share, which is based on your net income. So when he says everything is priced in, what does that mean? Because if NVIDIA is going to keep growing, which is the only reason anyone's buying NVIDIA, because you think the AI landscape, the humanoid robots, the LLMs, AGI, self-driving, blah, 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 all this stuff is going to keep going, then NVIDIA is at the epicenter of that. It's not priced in. In fact, it's heavily discounted against where it's going to go in the future. So I don't know, dude. That the argument about it being priced in, like the tariff stuff is whatever. Like the tariff, no one can control that. But the priced in part, without bringing up kind of core numbers, was a bit confusing to me. That was Seaport Research. So they're one of the only firms on Wall Street. And I don't know that. I've never seen that analyst before, but apparently he runs Seaport Research, and they have one of the, I think there's like one or two firms that have a sell. I think DA Davidson also has a sell, but he is one of the firms that has a sell report on NVIDIA. Berkshire Hathaway 538. I think that's an all-time high, right? I think that's an all-time high on Berkshire. Yeah, look at that. It's up 20% year to date. Wow, outperforming everything year to date. Cannot bet against Buffett. and you can see it's up right here. You can see it's up right here. One of the things about these independent Wall Street firms is, again, sometimes you have to make a name for yourself. The best example for this is Gordon Johnson. He has publicly admitted that people paid him, like this is all public, to talk shit about Tesla. He did a Meet Kevin interview 2 years ago. You can go look it up. And he publicly admits, yeah, my clients wanted me to like be negative Tesla. But now he built a research firm called GLJ Research or whatever. And he's been able to make a living off being bearish on Tesla, even though he's been wrong. So sometimes people do it for the clout more than anything. So I don't know. Maybe that's what he's doing right there, because the argument's just like, I don't know. The arguments just were not as strong. Is Amazon going green? Amazon goes green. Amazon finds a way. I think Apple's the only one left that's red. Apple still 4%, not even getting a little bit of green there. Amazon going green. Do we sell some covered calls on Amazon, bro? We have 100 shares. We should do something with it, right? Let's see. How about May 9th, which is a week from now? 200? Is that great? We'll get $70 or something. If you go to May 16th, you get about $1.60. I think that's crazy. That's not horrible. Where's Meta? Meta, are we 600 on Meta? Wow, Meta. 600, basically 599.34. Look, congrats. Congrats to everyone who owns Meta. You deserve it. I mean, you can't bet against Zucks. You just can't bet against Zucks. It's just an unbelievably incredible, profitable, founder-led business. This is a $1,000 stock. We know it's going to be a $1,000 stock. And eventually it'll be much more than that, because this AI revolution, if from the hardware perspective on the wearables, I think Meta's going to lead that when it comes to glasses. And if they do, that's a whole new vertical that has not been unlocked. My average on Amazon is 190. You guys maybe buy it yesterday before earnings. So it's basically break even. And yeah. So we're just going to keep it right here. I think we'll just keep it, dude. Like, it's Amazon, bro. Like, I've owned Amazon before in the past, but it's like I have no pain holding this one. So it's kind of just, it is what it is. We don't have to stress too much about it. Finally, my put on Amazon tomorrow at market close worked in favor. Yeah, some of these puts have not been printing on some of the Mag 7 names. Ironically, right? Puts on like random names have been working, but Mag 7s, they haven't, because the market's just been essentially disrespectful, in my opinion, to Mag 7s all year. And the fact that Meta got below 500, it was there, you know? The market really took it down. So even Google, I still think, is getting disrespected. Although Google, 166 on the day, I mean, that's not horrible. Getting a little bit more respect, 164, 63 on Google. Pinterest right here, 2685. Microsoft, 435. Grab, 490. Then Meta, basically at 600. Amazon, 190. Currently right now. Is Elf mooning? You know, Steve was looking at Elf 2 weeks ago. Why is Elf up 6%? Steve literally called me to talk about it. I don't think he bought it, but he was like, why aren't we looking at Elf? I was like, because I don't like holiday movies. And then I still don't know if he was trolling me or not. He was like, what are you talking about? I was like, the holiday movie, Elf? He's like, I don't know what you're talking about. I was like, the one with Will Ferrell? Are you kidding me? Like, you're the guy who knows all the movies. He's like, I still don't know if he was trolling me, because he was like, he kind of sounded serious that he didn't know what movie that was. I was like, how do you not know this movie, bro? Like, out of all people. Yeah, 9 days in a row going green. Solo says I bought Elf at 49. Why is it pumping today? Is it just the market? I don't see the headline. I don't see like Taylor Swift launching makeup or anything. But it's going green. I think everything, dude, is going green. United Healthcare, what about that one? UNH. That's under 400. I don't think they deserve to be this low after cutting full year profit guidance. I think they really sandbagged, but that's not something shareholders like. So UNH going down another 1% today. Uber also getting some love. Look at that, up 4%. Wow, Uber and Tesla on the same day pumping. That's how you know it's a green day. Usually they go opposite of each other. And then Palantir still holding on to 121. We are below 123. But we're at 121.84 right now. Where's the S&P? Riot also, great rally today. They tanked after hours yesterday. Now it's up 10%. That's also because of Bitcoin doing what Bitcoin does. Bitcoin's at 97.6, trying to get back to 80,000 or 98,000. Yeah, the Biden market's green. Microsoft's still up 2%. And then And then Instacart as well. Yeah, look at that one. That one's running. Instacart right here, up freaking 14%. My goodness. And then Uber is still holding on to 4% on the day. Okay, this is not bad. This is not bad at all. Why is the 10-year up? Okay, so the reason the 10-year is up right now is because people are selling bonds, which is what causes yields to go up. They go inverse against buying bonds. And they're buying stocks. Now, you may be asking, why would people be selling bonds to buy stocks? Wow, 4.3 on the 10-year. But see, okay, so this is not a bad thing. It's bad if stocks go down and then yields go up, because theoretically people should be buying bonds, which gets yields to come down because they're afraid of stocks, right? So they leave stocks and they go to bonds. If they're buying stocks and selling bonds, that's just the market saying, we don't care about the 10-year treasury anymore. We care about NVIDIA. And so we're going to buy equities. Where's the S&P as well? S&P now is up, 1.2% of the day. So that is what's causing yields to spike, which is not scary. However, we do have to refinance our debt. And in order to refinance debt, these yields have to come down. The thesis in January was Trump's going to crash the market to get yields to come down. He tried, didn't work. Yields went up. So the only other way to get yields to come down is Mr. Jerome Powell. Mr. Jerome Powell. So we're going to have to really get some rate cuts now to refinance our debt at a cheaper cost. Netflix, 1151, all-time highs on Netflix. It was all luck for Joseph Carlson, all of this. His conviction against everyone's bearishness was all luck. That's how Carlson did it. 1151 right here on Netflix. Snappy Chat, 834. All right, Snapchat, it's making a little bit of a move. Let's see if they can hold on to some of this. Snapchat right here, not doing too bad. We bought that dip on Hood yesterday, bro. Yeah, Doug bought the dip. I bought the dip. I bought another 20 shares after I bought the 50. And so got about 70 more shares yesterday. Dude, this is just turning into a stock. I'm just going to keep every month trying to get as much as I can. If I can try to get, 20 to 50 shares every other week, just keep getting more of it. I'm so convinced at this point. And if I think the worst is over for the tariff volatility, then I don't think we go back to 32. But if we do, all right, I'll buy more. I'm not in options anymore. I don't have to worry about being over leveraged. I do have my 2026 options with a $20 strike. I think those will be fine. So now any excess cash I get, I can just keep allocating to some of these names that I want more of. Grab right here at 490. Hood, again, trying to get back to 50. Meta, again, just below 600. And then Palantir, 121.92 on the day. CrowdStrike as well. Yeah, this thing, bro. Holy crap. This is a monster. 440. Fell under 200 back in August. Some great buys on those. And see, in CrowdStrike, dude, people talk about Palantir's valuation because it's Palantir and it has a lot of attention. CrowdStrike also is freaking expensive. CrowdStrike trades at a PE of, okay, this is the wrong, hold on. Let me look at the actual one. The forward PE on CrowdStrike is 700. Am I reading this right? 7P, where is it? Yeah, 700. 700. So Palantir's at 600. So it's come on, bro. The reason that people don't cry about it is because it's A, they're showing growth, so they look past it and they justify it. B, it's not a monopoly, but it's one of those arguments where they have a really good positioning in endpoint security. So that's what helps them. Oh wow, U.S. Department of Justice to seek divestiture of Google advertising technology assets. Wow. Holy great, dude. See, Meta's not dealing with this stuff yet. Now, Meta might deal with it with their FTC case, but every time Google gets a little bit of love, you get a headline like this. So what would they make them sell then? DoubleClick? They would make them sell DoubleClick? What advertising technology, what would they make them sell? Or is that a way to say Chrome or something? Google Ad Tech, huh? This is always the concern right here with Google. The reason you might not see CrowdStrike's price to earnings as well is because I think they're not profitable on a TTM basis. That's why it's coming in negative. But if you look forward, that's where the PE becomes pretty aggressive. Their price to sales is way cheaper than Palantir. I'll agree with that. That's for sure. But still, they're trading at a multi-hundred level amount from their earnings. But people just don't, care about it that much. Dude, this is pretty incredible. Ad tech is the stuff you build into your website. But okay, so if Google breaks up with that, is the Justice Department just saying we want other companies to have access to the way that Google uses ad tech, right? Like, because divesting from that means that I would imagine other people can use it, or are they saying Google just can't use it anymore? But that's weird because, that's how Google makes a lot of their search revenue, by continuing to have the right cookies and all that stuff in their ad tech. Here's a quick update on Berkshire Hathaway. So Saturday, he goes live. Here's a preview of what we're going to get from the GOAT tomorrow, 8:30 in the morning.
Part of the coverage, of course, our senior markets commentator, Mike Santoli, who was with us live from Omaha ahead of the action. How's it look down there, Mike?
Yeah, Carl, actually just getting moving in terms of the preliminaries. In fact, Warren Buffett is now touring the floor here. It's right behind me, as a matter of fact. He usually comes out, he talks to all the officers, all the troops, with all of his operating businesses that have displays here. You see Greg Abel there, too. He's the vice chair for the non-insurance operations, sort of the heir apparent as well for the CEO. So that gets rolling right now. I think there's a lot of eagerness to hear what Warren Buffett's going to have to say about a lot of things going on in the world right here. I feel like every year I say that the Berkshire Hathaway meeting comes with Berkshire operating from a position of strength. And, if times are good, they have a broad exposure to the U.S. economy through its operating businesses. If things are tough, if there's a lot of financial stress, obviously the cash position and also the decades of credibility and the strong balance sheet makes it very coveted by investors. And that's really been reflected in the stock performance and the stock's valuation right here.
Yeah, what do we glean from some of the moves that Berkshire has made, selling off positions in Apple, Bank of America, what they're doing with the cash, and what that says about the environment?
It's interesting, Sarah. I mean, I don't think that Warren Buffett or his lieutenants would say they're making any kind of explicit market call. I think there's a lot of kind of portfolio maintenance that's gone on. The Apple position got just, I think, too big as a part of the overall public equity position. The valuation was also no longer particularly attractive. Trimmed it back down, but it's still they're still on 2% of the company at last report. The cash position is obviously something that sits there both as a source of potential energy, but also maybe tacitly as a reflection of a lack of very compelling, very large opportunities that are well priced. Now, whether in fact Buffett is trying to kind of set up this company for the eventual transition in a position of just maximum strength and flexibility and optionality by having all that cash, that's a question we might get. I don't think he's going to be too explicit about that, but I'm sure he's going to be asked in the Q&A to weigh in on tariffs, on everything going on with global trade, things with the federal budget is something he also often has a lot of thoughts on.
As we watch pictures of Warren in the cart with Becky, one of the great traditions
and our
of the
Becky
meeting.
Quick, of course, yes.
Not that for 94. He's going to take hours of questions, too,
No,
right,
it looks
Mike?
pretty good. Yeah, absolutely. Yes.
All right, that'll be an important one. We're going to see what Buffett did in his portfolio over the past couple of months, because we don't really know yet. And then we're going to get an update from him answering questions tomorrow. So not just going to be the moves, Apple, what is he selling, buying, yada, yada, but also his perspectives on tariffs, the market, all that stuff. I think I'll stream it tomorrow. I really don't know yet. We're going to see. It starts early in the morning, so I might not be able to. But if I do, I'll be there. If not, it'll be live on CNBC. But we're definitely going to cover it on the Sunday show and see what he said. Yeah, they always do it on Saturday. It'll be on Saturday. There's going to be like 50,000 people in the room, dude. Just everybody there. A, to pay their respects, and B, to listen to the GOAT speak. I mean, just the stock price alone this year is incredible, dude. Outperforming everything in the midst of all the volatility. And he did it without technology. Apple is the only thing that helped him get here, but he didn't have to find all these other companies. He just did it his way. All right, cool. I think that's it for me today. I thought I was going to end at like 10:30, go early today, because I think you guys can tell it's really bad. It's like it's getting to the point where I need to shut the hell up for like 48 hours and just not say anything to get my throat to relax. I've been drinking tea. I've been eating the halls, all that stuff. But I don't know. This week I've never had a week like this. In 2 years, I've never had a week where I can't talk. And I'm not sick. I'm not like I have a fever. It's just like it's pure losing of the voice. But I think I just need to take a little bit of time and we'll get back for Sunday. So I will be back on the market close though. So I'm going to make sure Steve comes on the show and I'll just keep asking him questions so that Steve can keep talking and, poke him around about Apple. That'll be fun. And Palantir. Palantir, dude, what a day. 122. 122 on Palantir. My goodness. Just incredible. Just incredible. Not talking, it's impossible. Dude, this morning I woke up and I realized how bad it was. Like I tried to say good morning to myself and I was like, oh man, it's bad. So I just tried to like take a walk and drink some tea and just get some hot water. And I was like, all right, when we start the show, I'm going to try to just not be super aggressive. And then we got the non-farm payroll number that was pretty aggressive. And I was like, all right, it's going to be hard to not talk about this right now. So, all right, cool. Thank you, everybody. We'll be back at 3:45 for the market close. And that's pretty much it. My sister's a voice coach. The only cure is to not speak for a while. Wow. Yeah, I feel like because every my talking for the past 3 hours has been hurting my throat for the past 3 hours. Like it's just been hurting. I don't even know how to describe. It's just like there's a sting right there that I can't describe. So I feel like the easiest way is to just like not talk for a bit. All right, cool. That's it. Let's get out of here. Word of the day. And for those that I don't see on the market close, happy Friday. If I don't see you on Palantir Weekly, have a good weekend. And I'll be back Sunday for the Future Show, Friday for Palantir Weekly, and then Monday, we've got a hell of a day. We've got our Super Bowl, the company we all got so lucky on. We got we got the earnings on for Palantir. All right, word of the day, Xanthic.
Xanthic.
Of or relating to a yellow or yellowish color. Has anyone ever heard this word? A xanthic haze hung in the afternoon sky before the storm rolled in. The textbook's margins had become xanthic with age and repeated use. Sounds like Xanax or something. Xanthic. Xanthik. What images do we get for this? We just get a bunch of yellow fish. Okay, Xanthic. I've never heard of that one before. If you guys have, if you guys ever hear this word again, you're gonna think of the market open, because I doubt a lot of people heard of Xanthic. And if you're at like a party or something, and like you describe something that's yellow, it's like, oh wow, that's very Xanthic. You can get some looks by some people saying, why are you trying to sound smart right now? So there you go. That's what we got. Xanthic. More yellow. All right. Thank you, everybody. Appreciate it. Yeah, Hood's bars on Legend are Xanthic. Yeah, exactly. They use Xanthic colors. Thank you, everybody. Appreciate it. Again, Palantir, great day. If I don't see you throughout the rest of the day, I'll see you guys next week on the market open. And then we got Palantir earnings. 122 right here on Palantir, up about 5.1% on the day. And then you got the S&P 500 right here at 564, up about 1.14% as we end out the market open. All right. Thank you, everybody. I'll see you guys at 3:45 on the close. Bye, everyone. Have a good one.